Hi guys, good morning. In the last class we are discussing purchase quantity. So let's revise once this topic purchase quantity and later we'll move on to the next topic. Okay na? So purchase quantity na. Basically what do you mean by this purchase quantity? Generally in the manufacturing organizations, raw material will be given as a input and they will convert that raw material into finished goods. So here the question is, suppose let's take yesterday's example. In a factory, the production per annum, they are processing how many units? 1 lakh units they are processing. So how much quantity they should purchase at a time from the supplier? They have to purchase how much quantity they should purchase from the supplier at a time. Yesterday we were discussing, in the last class we were discussing one example of Zomato, right? So taking an example of Zomato, we can revise the same concept here. If you are placing 5 orders at a time, what will be your ordering cost? 500 rupees. Instead of that, what we are doing, we are placing 5 items in one order only. For that purpose, what is the ordering cost? We are paying 100 rupees only. So there is a savings in the ordering cost. How much? 400. So that is like general knowledge basis we said. But technically in the material cost, how much quantity should be purchased at a time? It is known by a concept called as EOQ, economic order quantity. What do you mean by this economic order quantity, sir? It is the ordering size where our total ordering cost and total carrying cost both will be minimum. Our total ordering cost and total carrying cost both will be minimum. There are certain assumptions for EOQ. Like assumptions such as annual demand must be known, compulsory annual consumption must be known. Without knowing annual consumption, we cannot apply EOQ. And ordering cost per order do not change. In EOQ, whatever the ordering cost per order we are paying, it will not change. Price per unit or price per kg remains constant, means price per whatever the raw material we are purchasing, that price should not change. If anything happens, if anything violates in this assumption, then EOQ does not apply. So what is the formula we will use for economic order quantity? EOQ is equals to under root 2AO by C. Here A stands for annual consumption, O stands for ordering cost per order, C stands for carrying cost per unit per annum. At EOQ always total ordering cost is equals to total carrying cost. At EOQ always what will be the total ordering cost will be equaling to total carrying cost. So what do you mean by total ordering cost, sir? It represents the cost which is incurred for placing the orders. It represents the cost which we are incurring for placing one order. That we will call it as a total ordering cost. Formula. What is the formula we will use for the total ordering cost? Total ordering cost is equals to number of orders, means how many number of orders we are placing, into cost per order. What is the cost per one order? That is the formula for total ordering cost. Number of orders is equals to, what is the formula? Annual demand divided by EOQ, economic order quantity. How to find out number of orders? What is your annual demand divided by EOQ, means what is your ordering quantity. If you divide, you will get the number of orders. Next concept, total carrying cost. What do you mean by this total carrying cost? It represents the cost which is incurred for storage of raw materials in a factory ground. Basically we can say carrying cost. To carry certain quantity of raw material, what is the cost we have to incur? That will call it as a carrying cost. Technically the formula is half into economic order quantity into carrying cost per unit per annum. CCPU, carrying cost per unit per annum. This is the formula for TCC. Then what is the formula for total cost? Total cost is nothing but total purchase cost plus total ordering cost plus total carrying cost. Already we know total ordering cost as well as total carrying cost. What do you mean by total purchase cost? Price per kg into annual demand, means what is the price which you are purchasing per kg into what is your annual demand. If you multiply, you will get the total purchase cost. And sometimes they will ask consecutive time gap between two orders. Consecutive gap between two orders means what is the time gap between order 1 and order 2. If you are placing order 1 and order 2, what is the time gap between these two orders? How to find out that? It's very simple. If it's a days, 365 days. If it's a month, 12 months. If it's a week, 52 weeks divided by number of orders. This is the formula we will use for finding out the EOQ concept, purchase quantity. Let's once go through ICMA material also, then we'll move on to the further topic. You can see Nana. He gave theoretically economic order quantity. Economic order quantity is nothing but it is the ordering size. Economic order quantity is the size of the order for which the total cost of material will be minimum. In a simple language, he said the total cost of the material will be minimum. Nana. What do you mean by the total cost of material? Total cost of material is nothing but buying cost plus total ordering cost plus total carrying cost. And buying cost is nothing but TPC Nana here. Buying cost is nothing but what Nana? TPC here, total purchase cost. Okay na? Next, ordering cost definition he gave, carrying cost definition he gave. The calculation of economic order quantity of a material to be purchased is subjected to the following assumptions. He gave the assumptions Nana. That's what. Ordering cost per order and carrying cost per unit per annum are known, they are fixed. In the EOQ, ordering cost and carrying cost both should not change in any they should remain constant or they should remain fixed. Anticipated usage of material is known, that is nothing but annual demand must be known. Nana. Cost per unit of the material is constant. The cost per unit or cost per kg, whatever we are purchasing, that raw material price should be constant, it should not change. The quantity of material order is received immediately. Lead time is 0. What is the meaning of this sentence? Nana? Means whatever the material we are ordering, it should be received immediately. Whatever the material we are ordering, that should be received immediately. Nana. There should not be a time gap. So these are the assumptions which we have to consider in EOQ, economic order quantity. So suppose if ordering cost per order changes, sir, then EOQ will not apply. Sir, carrying cost per unit per annum changes, EOQ will not apply. Sir, annual demand is not known, sir, EOQ will not apply. Cost per price, cost per unit or cost per price of a cost per price of a kg changes, sir, then also EOQ concept will not apply. Nana. So this is the overall assumptions for EOQ. Nana. And he gave the formula also here. In the ICMA material, once again I am telling you, in the ICMA material he won't explain in the complete coverage view. Nana. Just he will give overall view, that's all. While solving the questions, he will give overall view, that's all. The famous mathematician Wilson, who has derived this formula, Nana, sometimes there is a possibility that they can ask MCQ question. Nana. The person who has derived this economic order quantity is nothing but Wilson. Nana. He is the person who has invented this formula. Economic order quantity is equals to formula under root 2AO by C. Same thing he is trying to explain. Nana. So you can see this is a carrying cost line and this is ordering cost line. This point is called as EOQ. Nana. That point, the meeting point, the connecting point between the ordering cost and the carrying cost is nothing but EOQ. There it will be minimum. Nana. Cost will be minimum. Next, Nana, topic number 2.1.2, inventory management and control. Nana. Inventory management and control, there are different classes of stores. Nana, do we have? One is a centralized stores, another one is decentralized stores. Nana. Okay, na? The usual practice in most of the business concern is to have a central store. Most of the business concern or most of the business organizations will prefer central store. Separate store to meet the requirements of each production department are not popular because of the heavy expenditure involved. So why each and every business organization do not have decentralized stores means basically to maintain those decentralized stores, it's a cost. It will involve a very heavy expenditure. That is the reason we will not prefer centralized stores. In case of centralized stores, materials are received by and issued from one store department. Yes, in the case of centralization, the power is in the hands of one person. So here controlling authority will be only one person in the case of centralized stores. So in the case of centralized stores, the person who will receive and the person who will issue is only the one person. This enables better control, supervision and vigilance also. Yes, when the receipts and issues are happening in the hands of one person only, compulsory there will be a better control system. Supervision will be under complete 100% view. Vigilance means they will be always active. Vigilance is nothing but being active. All materials are kept at one central store. However, the central storage involves high transportation costs, chances of loss in transit and delay in the receipt of stores by the department. So there is advantages as well as disadvantages. Advantages is what? Better control will better control will be there, supervision will be there, and vigilance also will be there. Whereas what are the disadvantages here? The disadvantages is when the goods are being stored in a central location. Central location is generally it will be a far from the departments, Nana. Generally it will be locating far from the department. Let's take an example of Reliance. Reliance is having its central where, Nana, in Mumbai, correct? Whatever the things we are ordering like assets or major things, it has to come from Mumbai to Bangalore is a very far location, right? Like that, okay na? So however, central storage involves high transportation cost. It will involve, na? Why? Because we need to transport from central location to the departmental store location. It's a transportation cost will be like. Chances of loss in transit also will happen, Nana. When we are transporting, there is a chances that theft may happen, or damage may happen, or accident may happen. This kind of next, Nana. And there will be delay in the receipt of stores by the department, Nana. Generally, when we are transporting from central location to the departmental store location, there is a high chances that there will be a delay also, Nana. When there is a delay, again we cannot satisfy the customers, Nana. We can't deliver on time to the customers. These kind of things may happen. So in the case of centralized store, advantages also is there, disadvantages also is there, Nana. Next, Nana, decentralized stores. Under these type of stores, independent stores are situated in various departments. Handling of stores is undertaken by the storekeeper in each department. So basically, in a short language, if you discuss power in the hands of power is in the hands of multiple persons, Nana. In the case of decentralized stores, the power will be in the hands of multiple people, Nana. So handling of stores is undertaken by generally storekeeper in each department, Nana. So in each department, storekeeper will be there. The storekeeper will be taking care. Means the power is in the hands of storekeeper here. The departments requiring stores can draw from their respective stores situated in the departments. Whoever they require the raw material, they can withdraw. They need not to go for central location. They can withdraw from their stores department itself. The disadvantages of centralized stores can be eliminated. Yes, where it is a disadvantage in centralized, it will become advantage in decentralized, Nana. But these type of stores are uncommon because heavy expenditure is involved. What is the disadvantage here? Decentralized stores, generally to establish and to maintain decentralized stores, it will be involve a heavy expenditure. That is the one of the disadvantage, Nana. Next, third one, Nana. Central stores with sub-stores or impressed stores, Nana. So this is the third one. It's a different from, it's a combination of centralized and decentralized, Nana. This is impressed store or sub-store is nothing but it's a combination of central and decentralized, Nana. In large organization, factories may be located at different places which are far from the central stores. So in the large organization, generally the factories will be located at a very far places, Nana, from the factory. So in order to keep the transportation cost and handling charges to the minimum level, sub-stores are situated near the factory. So just in order to keep transportation costs and handling charges to be minimum level, Nana. They wanted to reduce the transportation cost and they wanted to reduce the storage cost. So to overcome these two problems, they will locate sub-stores. Sub-stores is nothing but a sub-store is a store which is under the control of central store. Sub-store is a store which will be under the control of central store, Nana. So that will be located near the factory, Nana. For each item of material, a quantity is determined. This should be kept in the stock at the beginning of any period. And at the end of the period, the storekeeper of each sub-store will request from the central store the quantity of material consumed to bring the stock up to the determined quantity. Simple language if you say. So in each and every sub-store, storekeeper will be there. The storekeeper, once the factory, whatever the raw material which is required by the factory, it should be maintained in advance by the sub-store. So whenever the factory requires, immediately the sub-store will discharge that material to the stores department. Then immediately once the material has been issued, again he will give a request to the central store location to refill these items. This is how central sub-stores will work, Nana. Next, classification of codification of material, Nana. Classification and codification of material is nothing but like how to identify a raw material, Nana. Basically, how to identify a raw material. Various classes of coding in practice and the common types are stated below. Nana. Means one company will follow one thing. Nana. Some companies they will follow alphabetic scheme, Nana, to identify their raw material. To identify their raw material, they will follow which scheme, Nana? Alphabetic scheme. Like alphabetic scheme is nothing but like name, they will keep their code name is nothing but suppose let's take a mic. If you're taking an example of a mic which we are using, basically almost all the mics will be which brand? Nana? Ahuja brand, correct? Ahuja brand. Like the Ahuja is a one name, Nana, like alphabetical scheme, that is. Next, Nana, numeric sense. Nana. Numeric sense is nothing but here they will identify the raw material by using numerical numbers. Nana. Numerical numbers like 310, 312, like rule numbers will be there for you when you are going for a college to identify a person. There will be a rule number. Same way to identify a raw material, they will give number. Sometimes when the usage of raw materials is more, Nana, like in the case of car assembly process and all, the usage of raw material will be more. In that case, it's very difficult to identify alphabetic or numerical scheme. In that case, they will follow what, Nana? They'll give one standard number. Under that standard number, they'll give decimals, Nana. There is a block scheme also. Block scheme is nothing but they will use a series of number. Nana. Block scheme is nothing but series of number. Series of number 1 to 100, 100 to 200, 200 to 500, 500 to 1000. Like that is called as a block scheme. Block scheme is nothing but 100. Material number 1, 100. Material number 2, 101. Material number 3, 103. Like that they will keep on increasing the number. Nana. That is called as a block scheme. Combination scheme is nothing but alphanumeric, it will be done. So few letters will be alphabetical and few letters will be numerical, like that. So these are the different methods for identifying a raw material. So which method they will use, sir? It depends upon the company to company. There is no discretion that they have to use this scheme only. It depends upon the organization to organization, Nana. Advantages and all just you can go through, Nana. That is not that much important. Next one, Nana, stock levels. Next concept do we have here is stock levels, Nana. Okay, na? So let us discuss through with the help of one diagram, Nana, stock levels. So what are the different stock levels an organization has to maintain? Just now we discussed purchased quantity is nothing but which quantity we should purchase, Nana? Always we should purchase economic order quantity. Why, Nana? Why we have to purchase economic order quantity? Why? Because at EOQ always our total carrying cost and total ordering cost both will be minimum. That is the reason we will purchase at EOQ. Same way, how much stock we should maintain in our factory godowns, Nana? Let us understand with the help of a diagram, Nana. Okay, na? Okay, Nana. See here. Let us assume this is a factory godown, Nana. Let us assume this is a factory godown. So if this is a factory godown, you can see there is a different stock levels which is maintained in the factory godown, Nana. The stock level which is indicating here by dots, you can see. The first stock level which is indicating here by dots now. The first stock level which is indicating here by dots, Nana. So this complete stock level, whatever it is there, this complete stock level, what is there, this stock level, will call it as a safety stock level, Nana. So what do you mean by safety stock level, Nana? It is the stock level, it is the stock level which is in danger, Nana. It is the stock level which is in danger, we can say simply. Okay, see here, this is the safety stock level, and if you assume this is a factory godown, this is a which level, Nana? Safety stock level, or otherwise in another language we can say danger level also, Nana. In another language we can say it is a danger level. So once an organization is reaching this level, when the stock is reaching this level, you can say this is the last level of the stock, means almost all the stock is in the end level, Nana. So when this level is reached, immediately the issue of stock, Nana, the issue of raw material to the production department will be stopped immediately. Why? Because below this there is no other stock. This is only the last stock which we are holding, the last level of stock which we are holding. After this level there is no other level. It's going to factory godown is going to be empty. So when the stock level reaches at this level, immediately the issue of raw material will be stopped, Nana. Issue of raw material will be stopped immediately. Next, Nana. Minimum level, above the safety stock level, the another level we have, Nana, that is minimum level. You can see this here, Nana. This level is called as a which level, Nana? Minimum level. What do you mean by minimum level? It is the minimum stock level which needs to be maintained by the business organization throughout the year, irrespective of the production capacity, Nana. Irrespective of the production capacity, it is the minimum stock level which an organization has to maintain throughout the year. Means whether you have production, whether you don't have production, but minimum stock level you have to maintain throughout the year. If you are not going to maintain minimum level, below the minimum level, what is the level? Danger level. So below the minimum level, what is the level? Danger level. Danger is nothing but it's indicating the organization raw material is going to become empty. So production is going to stop. So it is indicating something danger in the nearby. Something danger nearby. Next, Nana, above the minimum level, there is another level, Nana, that we will call it as a EOQ, economic order quantity level, or otherwise we can say reorder level. This level we can say economic order quantity level, or otherwise reorder level. So what do you mean by this reorder level, sir? So it is the level at which a fresh stock order should be initiated, Nana. Means once we are issuing the raw material at this level, immediately after issue we have to place a fresh order. That is only called as reorder level. The name itself it is indicating meaning reorder. Reorder means we have to repeat the order. We have to replace the fresh order immediately after the issue of raw materials. Next level we are having average stock level, Nana. Average stock level is nothing but it is the level of stock which may be maintained on an average throughout the year, Nana. So there is no force on the business organization. They have to maintain average, Nana. Average is it's up to their wish. They can maintain this stock level. They can maintain this stock level and on average throughout the year, so that they will be on more safer side. Next, Nana, this level we can see. This point is nothing but maximum stock level, Nana. Maximum stock level means what, Nana? In any business organization at any point of time, this is the maximum stock which they have to maintain in a business organization, Nana. Above that still there is a space in the factory godown, you can see. Above that there is a space in the factory godown, right? So above maximum stock level, and business organization should not maintain the stock, Nana. Above maximum stock level, a business organization should not maintain the stock. Why? Already maximum level is indicating the maximum level of stock which can be maintained by a business organization at any point of time. If a business organization is maintaining the stock above maximum level, what are the consequences the organization has to face? What are the consequences an organization has to face? Consequence number one, working capital will be unnecessarily blocked, Nana. Why? Because in the factory godown maximum level is indicating that is the maximum highest level. If you are maintaining the stock above maximum level means what does indicates? Unnecessarily blockage of your working capital. So we are just unnecessarily blocking our working capital in that material investment. Second thing, maintenance cost will increase, Nana. maintenance cost will increase. We have to employ more number of labor to take care of that material. Why? Because we are maintaining highest quantity of raw material. When we are maintaining highest quantity, more security should be deployed on that material. So in that case, maintenance cost will increase. Storage cost also will increase. Apart from that, there is a high possibility for theft and all. Why? Because when you are maintaining above maximum quantity level, so when the people will be having an intention of theft. Why? Because when you are having a plenty of stock, if the people who are working in the organization, they will be having a hazy ideas in their mind. Already we are having a plenty of stock above maximum level. If I take few stock and if I take it to my home for consumption, who knows? Like that. That is the reason there is a possibility for abnormal reasons like theft of raw material. So these are there is a possibility of abnormal losses like damage or fire accidents. These kind of incidents also may happen. And when we are purchasing the raw material at high price, we may purchase. After a certain period of time, the price of the raw material may come down. So these are the consequences we have to face when we are maintaining the stock above maximum level. Above maximum level, what are the consequences we have to face, Nana? Let's note down here. Consequences to be faced for maintenance of stock. First one is unnecessary blockage of working capital. First one is unnecessary blockage of working capital. Second one, possibility for theft, fire damage. Third one, fall in the prices of raw material. Raw material prices may fall. Fourth one, high storage cost and carrying cost required. It requires high storage cost and high carrying cost also. So these are the consequences and a business organization need to face, Nana, if they are maintaining the stock above maximum stock level. So once let us see these stock levels, Nana. So different types of stock levels in a factory code. First one is danger level. So when an organization reaches danger level, immediately they have to stop the production, Nana. When an organization is reaching the danger level or safety stock level, an organization has to stop the issue of production, stop the issue of raw material for production, Nana. And only the raw material is issued for production for emergency purposes. Only for emergency purposes we will issue the raw material, Nana, for production. Next level do we have is a minimum stock level, Nana. The next level do we have is minimum stock level. It is the stock level which is required to be maintained by a business organization at any point of time, Nana. At any point of time also they have to maintain this stock level. Reorder level, it indicates the stock level where a fresh order needs to be placed, Nana. It indicates the stock level where they have to place a fresh order at a point of time. Next, Nana, average stock level. Average stock level is the stock level which may be maintained on average throughout the year, Nana. Maximum stock level, it indicates the quantity of stock level which can be maintained by a business organization at any point of time. At any point of time they have to maintain up to maximum stock level. More than maximum stock level they should not. If they are maintaining the more than maximum stock level, they have to face consequences like unnecessary blockage. So unnecessary blockage of their working capital, and there is a possibilities for theft, fire accident and all. Fall in the prices of raw material also, high storage cost and carrying cost required. So these are the consequences they have to face if they are maintaining the above maximum level. Next, we are having technical formulas also for this. Minimum stock level, maximum stock level, EOQ, reorder level, average stock level. For all these things we are having technical formulas also. Once we will go through that formulas. Okay. You can see here. The maximum level indicates the maximum quantity of an item of raw material that can be held in stock at any point of time. Here too, here it is enough. The stock in hand is regulated in such manner the normal it does not exceed this level. Means each and business organization they have to maintain the stock maximum level. They should not maintain more than maximum level. They should not maintain the stock. So while fixing this level, the following factors are to be taken into considerations. So the following are the factors which we need to take into consideration. These factors is not that much important. We don't even need to concentrate. Just we require definition and we require formula also. Maximum level is equals to what is the formula? Reorder level plus reorder quantity minus minimum rate of consumption into minimum reorder period. Minimum rate maximum stock level is equals to what is the formula? Reorder level plus reorder quantity minus minimum rate of consumption into minimum reorder period. For maximum level is equals to what is the formula? Reorder level plus reorder quantity. Reorder level generally we have to calculate. They won't give in the question. Reorder quantity they will give in the question itself. Minimum consumption, minimum rate of consumption and minimum reorder period, that will be also already given in the question itself only. Minimum level is equals to what is the formula? Reorder level minus normal rate of consumption into normal reorder period. This is the formula for minimum level. This is the formula for maximum level. Normal rate of consumption or average rate of consumption, both are same. Normal or average, both are same names. Reorder level minus average rate of consumption into average reorder period we can say, or normal rate of consumption into normal reorder period also we can say. Next, reorder level is equals to what is the formula? This is the original formula. Maximum rate of consumption into maximum reorder period. This is the original formula, and these two are derived formulas. These two are derived formulas. Depending upon the need, we will use another formula. What is the another formula? Minimum level plus consumption during the lead time, or minimum level plus normal rate of consumption into normal reorder period. That is nothing but from minimum level we used. Minimum level we derived this formula. Minimum level is equals to what is the formula? Reorder level minus normal rate of consumption into normal reorder period. From that formula they derived this formula. Next, danger level. Danger level is equals to formula average rate of consumption into maximum reorder period for emergency purchase. This is the formula for danger level. Next, another one more formula will be there. Average stock level. Average stock level is nothing but minimum stock level plus maximum stock level divided by 2. That is the formula for average stock level. Next, perpetual inventory system. Perpetual inventory system also they will be asking in the exam. 3 marks question. It's a very important question. What do you mean by this perpetual inventory system? Before discussing this perpetual inventory system, why this inventory system is required, you will understand. Let's take an example of DMart. Okay. So there will be a lot of people, they will be working inside the DMart, right? There will be a manager, there will be a supervisor, there will be a lot of employees working in the DMart. So DMart is basically, they will deal with the provisional store items which we require on day-to-day basis. Then why the employees or the manager or the supervisor who will be working inside the DMart, whether they will take all the items which is required for home consumption on daily basis, Okay, he is a manager, right? Suppose there is a manager for the DMart. Whatever the items he required for daily home consumption, in his home he required dal, he required surf packet, he required soaps, he required like oil, he required shampoos, everything he required. Whatever he required in his home, same thing will be there in the DMart. Okay, na? He will take all those items at free of cost. He will take it and he will go. Why? Because DMart owner will be not there in the Bangalore. Correct? He will be the manager, sole manager for that store. Whether he can do so? Generally, no person who is working in the DMart will do this kind of fraudulent activities. What is the main reason is, every day, like every week once or every week twice, compulsory some or other audits will be going on in those kind of outlets like DMart, Reliance, wherever the stock movement will be high, wherever the stock movement will be high, in those organization on regular basis audits will be performed. Compulsorily audits will be performed in those organizations. Like one day a person will come and he will do surprise audit. One day an auditor will come and he will do surprise audit. Surprise audit means what? Whether he will inform and come, he will not inform. Just he will, head office, he will send him to verify the stock. From the head office he will come, he will verify the stock and he will go. Next day another person will come. Another person will come and he said third party stock audit. Third party stock audit. Third party stock audit is nothing but it's done by some other unknown person to the business organization. That person we don't know who he is. That person is also appointed from outside. That person is appointed from the outside. Means our organization gave third party contract to some chartered accountant firm. The chartered accountant firm has sent some person for third party verification on so and so date. Yesterday only they did surprise audit. Today he came and he did third party audit. Then the head office, they will verify the stock. What is the closing stock of yesterday should match with the opening stock of third party audit. So these kind of verifications they will do on regular basis. Employee stock audit will do, employee stock audit they will do, quarterly audit they will do, month end audit they will do, year end audit they will do, half yearly audit they will do. Next, fortnight audit. Fortnight audit is nothing but every 14 days once they will do audit. So like this there are different types of 50 plus audits are available. So these type of audits will be keep on doing in this kind of organization. Then in these kind of organizations they will follow one inventory system that is only called as perpetual inventory system. So what do you mean by this perpetual inventory system, sir? Continuous verification of stock. They will be verifying the continuously. They will verifying the stock continuously, and this system will be known as perpetual inventory system. Let's go through this. Perpetual inventory system may be defined as a system of records maintained by the controlling department which reflects the physical movement of stocks and their current balance. Thus, it is a system of ascertaining the balance after every receipt and issue of material through stock records to facilitate the regular checking and to avoiding closing down the firm from stock taking. Why? Because this DMart, Big Bazaar, Reliance, all these Tata, supermarket, like that, all these kind of organizations, they won't shut down their business organizations, they will run their business organizations. But how they will maintain? They will maintain perpetual inventory system. Perpetual inventory system means what? After the receipt, immediately they will update the stock records. After the issue also, immediately they will update the stock records. In such a way they will maintain their stock records up to date. Means continuously they will maintain their stock records up to date. Because of this reason they need not to shut down their business organization for checking purpose. To ensure the accuracy of perpetual inventory record, bin card and stores ledger is also maintained. Bin card and stores ledger we will study in the further upcoming sessions. Physical verification of stores is made by a program of continuous stock checking. So that is nothing but perpetual inventory system is nothing but what, Nana? Perpetual inventory system means MCQ question possibility is there, Nana. Perpetual inventory system means continuous verification of stock. Continuous stock taking is essential feature for perpetual inventory system. For the perpetual inventory system, what is the essential feature? Continuous stock taking, which involves only the physical verification of stock records with actual stock. At any point of time, if an auditor is coming, again he will not check, Nana. He will check the physical verification of stock with actual records. Means, so whatever the records they maintain, they will check it with like a random basis. In a continuous stock taking, Physical verification is spread throughout the areas. They will do these verifications continuously throughout the year. Every day, 10 to 15 items are taken at random by rotation and checking so that surprise element in the stock verification may be maintained, and each item may be checked for a number of times each year. So every day minimum they will take 10 to 15 items randomly and they will verify those items. On the other hand, the surprise element is missing in case of a periodical checking. In the case of periodical checking, they will verify the stock on periodical basis, like half yearly ones, quarterly ones, yearly ones, like that verify. So if they are verifying the stock on periodically basis, there is a chances that they cannot eliminate or they cannot identify the frauds and errors which is happening in the organization. Continuous stock taking constantly monitors inventory levels in real time. Yes, when they are verifying the stock levels at continuous basis, because today auditor will come, auditor will check which item no one knows. That is the reason he will not be taking any risk for fraudulent activities. Why? Because the auditor will check which item we don't know. If that is the case, they cannot, if they are trying to do some fraudulent activities, they can be caught easily. So generally in the case of perpetual inventory system, no one will dare for fraudulent activities. Why? Because the items will be checked on regular basis, daily basis. That is the reason. Whereas periodic stock taking conducts periodical physical counts of inventory at specific intervals. That's all. In the periodical inventory system, they will verify the stock levels at a periodical intervals, means for every 2 months, 3 months once, like that they will verify those inventory levels. Nana. Okay. Now, next concept do we have is ABC analysis. Nana. ABC analysis. This is also important for 4 marks theory question, and a possibility is there. They can ask in the exam. ABC analysis. What do you mean by this ABC analysis? Let us take one example. Means ABC analysis nothing but A category items, B category items, C category items. Okay, now next concept is ABC analysis. Nana. So what do you mean by this A category? What do you mean this B category? What do you mean by this C category? Nana? Let us take one example. Based on that example, let us item units or kgs, price, category. Okay, item units or kgs, prices, category. Let's take an example of Big Bazaar. Nana. Let's take an example of Big Bazaar. First item is nothing but, let us take an example of Kaju. Nana. Okay, na? Kaju, we are having 400 kgs. Nana. We are having how many kgs? 400 kgs. The price per kg, let us assume 2000 rupees. Nana. What is the price per kg? Nana? 2000 rupees. 2000 into 400 kgs. Nana. That is nothing but, so required another one more column also. Nana. Let's wait for a second. Item units or kgs, price, value, category. So let's take first item is Kaju. Nana. Kaju, how many kgs we took? Nana? 400. What is the price per kg? Nana? 2000. That is nothing but, what is the value? Nana? 8 lakhs. So what is the value of Kaju? Nana? 8 lakhs. Second item, let us take dal. Tur dal. You know dal, right? So let's take an example of dal. This dal is 5000 kgs. Nana. This dal is how many kgs? Nana? 5000 kgs. Okay, na? Let us take price per kg. Nana. Price per kg is nothing but, let us take 150 rupees. 5000 into 150. That is nothing but how much? Nana? 7 lakhs. Otherwise, let us take instead of 5000 kgs, let us take some 2000 kgs now. 2000 into 150, that is nothing but how much nana? 3 lakhs. That is nothing but 3 lakhs nana. Third item nana, let us take cherries nana. Cherries of red color cherries will be there na, that cherries nana. Cherries is 300 kgs nana. How many kgs nana? 300 kgs. Price per kg is 1500 nana. What is the price per kg nana? 1500. That is nothing but what is the value nana? 4,50,000. Okay na? Fourth one, let's take example of rice nana, rice bags. So quantity do we have is 3000 kgs we have nana. How many kgs we have nana? 3000 kgs we have. Price per kg, let us assume 60 rupees nana. What is the price per kg nana? Rice 60 rupees. The value will become how much nana? 1,80,000. Fifth example, let's take salt nana. Let us take an example of salt. Salt we have 20,000 kgs nana. How many kgs nana? 20,000 kgs. Price per kg is how much nana? 10 rupees. What is the price per kg nana? 10 rupees. That is nothing but what is the value nana? 2 lakhs. What is the value nana? 2 lakhs. Next nana. Sixth one. Let us take an example of chili powder nana. Chili powder we are having 1500 kgs. How many kgs nana? 1500 kgs. Price per kg, let us assume 90 rupees nana. 1500 into 90. That is nothing but how much nana? 1,35,000. Next, seventh example, let's take chocolates nana. Chocolates we are having 15,000 units nana. Price per chocolate is 2. That is nothing but how much is the value nana? 30,000. Okay na? So this is the example we took. This is the example of one big bazaar nana. Okay na? In the big bazaar we know there will be a lot of different items will be there, like cold drinks, soft drinks, and different items will be there nana. Biscuit packet, chips packet, all different items will be there. I took 7 examples here. Now which is under A category? Now we have to decide which item is A category, which item is B category, and which item is C category. Now we have to decide. To decide A category, B category, C category, there is a certain definition for A category. What do you mean by A category items? Generally, the items which are covered under A category, A category, quantity will be low, but value will be high. Requires high control. Generally, the items which are covered under A category, the quantity will be what? Very low quantity, but the value of those items will be very high category. So any item which is covered under A category requires high control. Any item which is covered under A category requires which control? High control. See here, Kaju, if you see, how many kgs do we have nana? 400 kgs only. Out of all this quantity, you can see, out of the total quantity add up 400 plus 2000 plus 300 plus 3000 plus 20,000 plus 1500 plus 15,000. So total item is 42,200 nana. So Kaju is how much nana? Quantity 400 divided by 42,200 into 100. That is nothing but how much percentage nana? Less than 1%. The holding of Kaju quantity The holding of Kaju quantity is less than 1%. But you see the price, Nana. Price is very high, 2000 rupees. Price is very high. Quantity is low, but the price is very high. So we can call this as a which category item, Nana? This is categorized as A category item. This is categorized as which category item, Nana? A category item. Any item which is covered under A category generally requires high control. Generally requires high control. That is the reason whenever you are visiting a DMart, Reliance, Tata hypermarket or anything you visit, Nana, Kaju you can see. Generally where the Kaju is located, generally all the items will be available. Suppose if you want tur dal, if you want rice, if you want suji rava, otherwise if you want anything, any like peanuts or otherwise anything which you require, just you can go and you can pick up with your hand and you can check the quality of the item. Generally what people will do, Nana, when the people are walking around those items, generally they will pick some peanuts is there, peanuts they will pick into their hands and they will eat it, That is the reason you can observe in the case of Kaju they will maintain very lower quantity level. Rice bags they will maintain hundreds of bags. Sugar bags also they will maintain hundreds of bags. Peanuts also they will maintain very high quantity. Tur dal also they will maintain very high quantity. But you can see Kaju they will maintain only 120 kgs or 30 kgs, not more than that. They will maintain only 20 kgs or 30 kgs, not more than that. That too, that Kaju they will keep in a one glass jar. For that glass jar, they will put lock also, and one person will be security guard will be standing near that dry fruits. Wherever the dry fruits is located, nearby that Kaju, that person will be standing. If any person is coming and asking for a sample, he will rim and he will give one small piece for sample. That's all. He won't give a hand pick of Kaju to you. Hand pick of Kaju will be almost 100 to 200 rupees. He won't give that much of sample. He'll give only one small piece. Why? Because Kaju is covered under which category? A category. How can we decide A category, Nana? Quantity will be low, but the value will be very high, Nana. That is how we will conclude. Okay, na. Dal you can see. Dal how many kgs? Next one is B category, Nana. Quantity will be moderate. Value will be moderate. Requires moderate control. Requires which control, Nana? Moderate control. So B category items is nothing but quantity will be moderate quantity, Nana, and the value also will be moderate. Means it is not least, it is not highest, it will be in the middle, Nana. Dal you can see. How many kgs do we have, Nana? 2000 kgs. 2000 divided by 42,000 into 100. So that is nothing but almost how much percentage, Nana? 4.5, 5% is there. Dal is accommodating out of 100%, 5%. That is nothing but moderate quantity they are holding, Nana. Which quantity they are holding? They are holding a moderate quantity here. And the value is also at moderate price, Nana. How much it is coming? Around 150 rupees per kg. It is coming moderate value, Nana. So this has been categorized as which category, Nana? B category. This has been categorized as B category, Nana. Cherries they are holding how many kgs, Nana? 300 kgs. That is nothing but less than 1%. But the value is how much, Nana? 4,50,000. So that is nothing but a high value, low quantity. So this is also categorized as which category, Nana? A category item. Next, Nana, rice. 3000 kgs. 3000 kgs is nothing but they are holding moderate quantity. Price is 60 rupees. That is nothing but value is also moderate, Nana. So this we can categorize as a B category item, Nana. Salt. He is holding how many kgs, Nana? 20,000 kgs. 20,000 is nothing but almost 50%, Nana. Above 45, 48, around 48% it will be there, Nana. Means above almost near half 50%, Nana. So price is also 10 rupees. It's very low price. Price is very low price. So this is categorized so as a C category items, Nana. Quantity will be high, but a value will be low. Does not requires control. It do not require any control. Any item which is covered under the C category, nana, quantity will be high and the value will be low, nana. So it does not require any control. Salt, you can see quantity is very high, value is low. So this has been categorized as which category, nana? C category items. Chili 1500 kgs means moderate quantity, price 90, moderate only. So this has been categorized as B category, nana. Next, chocolates 15,000 chocolates, quantity is high, price 2 rupees per one chocolate, value is low, nana. So this can be categorized as a C category item. Okay, now this is how we should identify A category, B category, C category. This analysis we will call it as a what, nana? ABC analysis. ABC means A category, where the quantity will be at low but the value will be high, requires high control. Generally these kind of items requires which control, nana? High control. B category items, B category items is quantity will be moderate and the value also will be moderate, so requires moderate control, means we did not be, strict control will not be there. In the case of kaju, in the case of cherries, in the case of anjeera, in the case of kismis, wherever this dry fruits is located, you try to go over there, you try to open the box, he will not allow you to open the box. That security guard will come immediately and he will ask you what do you want. Immediately he will question you. Why? Because that high control will be there nearby that items. B category items, moderate items, rice, you see, if you are going to nearby one bin and if you are picking up a small amount of rice from that bin, still he will not question you. If you are tasting the rice also, he will not question you. He knows that you are not going to eat the complete rice. That is the reason it requires moderate control. C category items though, quantity will be high, value will be no. Wherever the chocolates will be located or wherever the salt packets will be located, valueless items will be there. Nearby that location, no person will be there. No person, no security guard also will be there, because you can't do anything, because the quantity will be very high but the value will be very low. That is the thing, nana. So this is called as a which analysis, nana? This is called as a ABC analysis. Now you can go through the theory, nana, you will understand. Next, ABC analysis is also known as Pareto analysis, nana. ABC analysis is also known as which analysis, nana? Pareto analysis. It is a technique used in inventory management to categorize the items based on their significance, nana. So ABC analysis is a one technique to categorize the items, nana, based on their significance. Significance is nothing but importance, based on their importance. This analysis is named after the Pareto principle, which states that roughly 80% of the effects come from 20% of the causes. In this context of inventory management, it means that small percentage of item often contribute to a significant portion of total value. Means items is very small, item is in very small quantity, but its value will be very high. This is the meaning of this sentence, nana. Items quantity will be low but the value will be very high. This is the meaning of this sentence. Under this system, the materials stocked may be classified into number of categories according to their importance, their value and frequency of replenishment during a period. The first category is known as a group E items, nana, may consist of only small percentage and the total items handled, but combined value may be large portion. That is called as a category item. Quantity will be in small percentage but the value will be very high, nana. The second category naming in the group is B category items, nana. May be relatively less important. These items moderate quantity, moderate control will be there, nana. In the third category consists of group C items. Okay, Nana. The next concept do we have is VED analysis now. So what do you mean by this VED analysis, Nana? VED is nothing but VED stands for vital, essential and desirable, Nana. VED analysis is a technique which is used in the inventory management to categorize the items based on their criticality and importance in their production and operational process. So basically this VED analysis is categorized, Nana, on the basis of their criticality and importance in the production process, Nana. Means which item is vital, which item is essential, or which spare part is desirable. Because there are certain items in a assembly, like take an example of a car assembly process. There are certain items vital. Vital is nothing but compulsory, it is required. Without those items, we can't do anything. We can't even start the production process. Certain items are essential, means it is required but not immediately. Desirable means like it's optional. If they want, they can adopt. If they don't want, they can just ignore it. The acronym VED stands for vital, essential and desirable. This analysis helps the organization to prioritize their efforts in managing inventory. So especially to manage the inventory, they will use this VED analysis, Nana. So let us see one by one. What do you mean by vital and what does it stands for? And what do you mean by essential, what does it stands for, and what do you mean by desirable and what does it stands for? First one, Nana, vital. The spare parts, stock out of which even for a shorter period of time will stop the production for quite some time, and wherein the stock out cost is very high are known as vital spare parts. For example, car assemble process, engine is a vital part. Without engine, the assemble activity cannot be started, Nana. Okay, so for example, car assemble process we can take engine is a which part, Nana? Vital part. Without engine even we cannot start. Without engine we cannot start the production or assemble process. So engine can be treated as a vital part. So when the vital part is not available even for a smaller period of time also, immediately we have to stop the production. Why? Because in order to assemble a car, first of all we require engine only. Why? Because everything is connected. Every spare part is connected to the engine itself. So if the engine itself is not available for a certain period of time, immediately we have to stop the production. So here when the stock are not available cost, stock out cost, in the case of vital, the stock out cost is very high. Why? Because depending upon the engine, remaining spare parts are dependent. So without assembling the engine, remaining people cannot work out. Why? Because engine to very vital part that will be assembled by the technical chief engineer. Once the technical chief engineer is assembling the vital spare parts, after that remaining small spare parts like assembling the tire car or otherwise assembling the body shape or otherwise fitting nut bolts and all these kind of activities can be done by the lower level staff. So here stock out time, here the stock out cost for the vital part is very high. That is the reason it is called as a vital part. Vital is nothing but very important. Example he gave, car engine. Next one, essential. Essential is nothing but if the spare part is necessary but not immediately, after a certain period of time. If this stock is not available for a certain period of time also, it's okay. But if it is not available for a more longer, if it's taking a more delay period, if it's taking a more longer period of time, then again it is also issue. The spare part, the spares or the material absence of which cannot be tolerated for more than few hours or a day, and cost of loss of production is high, which is essential for production to the continue, are known as essential items. Essential items is nothing but if the stock is not required immediately, but it is required after a certain period of time. Even after a certain period of time also, if the stock is not available, then the cost of production will be very high. Okay, na? Example, for example, car tires. No person can sell a car without a tire, right? No person is ready to purchase a car without tires. So compulsory we require tires for assembling a car. So example here, car assemble process. Tire is the example, essential. Tire is compulsory required but not required immediately. Why? Because first we have to assemble the engine, afterwards we have to assemble the car body shape, afterwards we have to assemble the clutch plates, brake plates, everything. In the last and final we can assemble the tires, like that. Desirable is nothing but optional. If this is not available also, it's not going to have any effect on the production. The desirable spare parts are those spare parts which are needed, but their absence for even for a week or more also will not stop rise to production. Example, CD player for a car assemble process. CD player is a desirable but not CD player, bumper or otherwise rear camera. All these are nothing but desirable but not mandatory. If this is not available also, still we can sell these items in the market. This is known as which analysis, Nana? VED analysis. This is also important theory question, Nana. Frequently they will keep on asking in the exam, Nana. VED analysis. Vital, essential, desirable. Vital is nothing but if this stock is not available for a smaller period of time also, the cost of production will be very high. Next, in the case of essential, these items are essential. If these items are not available for a certain period of time, it's a tolerable, but not more than a day or not more than a longer period of time. If it is not available, if it is the stock out is for a longer period of time, the essential also, it will be cost of production will be high only. Desirable, it's optional. If it's required, we can opt, or otherwise, if you leave it also, it does not have any impact on the production. Next, Nana. FSN analysis, Nana. FSN is nothing but fast, slow, non. FSN analysis is nothing but fast moving, slow moving, non-moving item, Nana. FSN analysis is another inventory management technique used to classify the items on the basis of their usage patterns. On the basis of their usage patterns, they will consider it as a fast moving, slow moving, non-moving items, Nana. So generally any product which is having the highest turnover ratio, that will be indicated as a fast moving item, Nana. Example, if you are taking an example of a provision store, Nana. In the provision store, what is the fast moving item, Nana, on daily basis? On daily basis, milk packets, curd packets, sugar. This will be a very fast moving item, Nana. Why? Curd, you will go to a provision store and you will purchase a milk packet. Whether you will purchase milk packet on daily basis or otherwise you will purchase weekly once, weekly twice. Compulsory, everyone will purchase a milk on daily basis. Vegetables on daily basis. These are nothing but fast moving items. Every business organization, they have to maintain the fast moving items available at every point of time, Nana. Why? Because you are going to a provision store, Nana. Suppose your mother said, go and bring one milk packet, 1 kg sugar, 1 kg tea powder, she said. Okay, na? She sent you to say, bring a milk packet as well as sugar as well as tea powder. You went to a shop, provision store which is located nearby. Sugar is there, tea powder is there, but milk is not available. Milk is not available. What you will do? For one day, you will purchase from another shop. But another next day also it is not available. Whether you will visit that shop again, you are not going to visit that shop again. What you will do, instead of going to that shop, you will shift to some another shop where the milk packet is also available. That is the reason in the case of fast moving items, every business organization, they have to maintain fast moving items at any point of time. At any point of time, these stocks should be available at all the times. Why? Because basically in the case of fast moving items, inventory turnover ratio also will be very high, Nana. Next, slow moving items. What do you mean by this is slow moving items? Slow moving items is nothing but they won't move fast, but at a specific interval period of time they will move. Like take an example like agarbatti will be there. Generally in each and every home they will be doing puja, right, on daily basis. So agarbatti they will be using. So this agarbatti they will purchase on daily basis or monthly once. Generally if you are going to a shop, if you are purchasing one big size agarbatti packet, that agarbatti packet will serve for 1 month. Almost all we can utilize it for 1 month. So that is nothing but the moment of agarbatti, whatever the product which we took here, that is a slow moving item. It will not move, means it will move, but it will move slowly. Why? It is required only monthly once interval. Like scent bottle will be there. Scent bottle you purchase daily or monthly once. Once if you are purchasing one scent bottle, that bottle we can serve for 1 month. So in that way, oil packet will purchase. Oil packet will purchase daily, I will purchase monthly once. So that also will purchase monthly once, Nana. Why? Because that also will serve for a period of almost 1 month if you are purchasing one 5 liters tin or 10 liters tin. So those kind of items will categorize as a slow moving items. Slow moving items requires to be replaced slowly, Nana. Why? Because it is not required immediately, so it is required slowly. We need to replace it slowly. Non-moving items, Nana. Non-moving items is nothing but we can take an example. When a product is newly entered into the market, when a new product is entered into the market and the product has become a big failure. These kind of items will call it as a non-moving items, Nana. These kind of items will call it as a non-moving items. Non-moving items, the example of non-moving items here we can take it as a example here for the non-moving items is We can take it as when you are going to a big bazaar more, when you are going Reliance, immediately when you are entering inside the entry point, immediately in front of it there will be a lot of offers will be there. Buy 2 get 3, buy 3 get 5, buy 1 get 2. These kind of offers will be there. If you are tempted to those offers, if you are going nearby to purchase, many number of times I observed it. Suppose I want to purchase biscuit packets, I will go nearby and I will see that offer. Whatever the biscuit packets which is there for offer, all those biscuit packets I have never seen in the market only, and ready to expire. I have never seen in the market ready to expire, because that is the reason he wanted to dispose those items. Why? Because it is not even moving in the store. It's a place waste. It's a waste of place also. So he wanted to dispose the items. How he want to dispose? One, the product has become utter flop, failure, and the second is the product is also not moving. Then in that case he will keep a offer, buy 1 get 2, buy 2 get 3, buy 3 get 5, those kind of offers. Suppose if you are tempted to chips packet, you see chips packet also unknown brands will be there. Suppose if you are tempted to soft drinks, if you observe there, that soft drinks also unknown brands will be there. Why? Because those all are market failure products. Those all are market failure products. That is the reason that is called as a non-moving items. In any business organization, they wanted to dispose as soon as possible this non-moving items. They wanted to replace this non-moving items with some fresh stock. This analysis we will call it as a FSN analysis. Fast moving, slow moving, non-moving analysis. This analysis is prepared on the basis of usage pattern of a product. Nana. Next, Nana. Just in time, important theory question. Nana. Frequently keep on asking in the exam, Nana, just in time. Just in time is a production and inventory management philosophy that originated in Japan. Just in time is a concept, it has been derived from the Japan. Nana. Why? Because India has to learn certain things from Japan also. Nana. In a Japan, generally the people will work for a minimum period of 10 to 15 hours of a time. But in India, if a person is working for 8 hours a day, then he is finished for the end of the day. But in Japan, they will habit to work for minimum 10 to 15 hours a day. Nana. Just in time is a production and inventory management technique which is adopted from Japan, and it is widely used in the manufacturing and other industries also. For the first time, the Japan country has invented this just in time in the Toyota company. Nana. Toyota cars, do you know this Toyota cars? Yeah, for the first time in this Toyota cars company, this just in time concept has been implemented for the first time. Nana. The primary goal of just in time, the word itself is the just in time. The primary goal of just in time is to produce and deliver the goods at the exact time they are needed, eliminating excess inventory and minimizing wastage. So just in the main agenda, the primary objective of just in time is to deliver the goods at exact time whenever they are required. Means it is not required before also. It is not required before also. Why? Because if it is received before, compulsory they have to maintain, they have to. If the raw material is received before, again they have to maintain in the factory godowns. Again, that is a headache. Maintenance cost will be there, storage cost will be there, carrying cost will be there. That is the reason just in the main primary objective of the just in time is to required to deliver the goods at exact time whenever they are required, and eliminating excess inventory and minimizing the wastage also. The just in time inventory system focuses on right material, right time, right place, and the exact amount also. Nana. The just in time inventory is focusing on what? Nana? Right material, right time, right place, and the exact amount, without the safety net of inventory. Means they don't want to keep any safety net also. They want exact quantity of raw material, they want it exact time, they want it exact place, they want the exact amount. In the case of Japan, maximum none of the companies will maintain the stock in advance. Nana. But in India, you can see there will be a large godowns, there will be a large big godowns for storage of raw materials. Why? Because in India we have a trust. If you are ordering one raw material, we will never receive on time. Nana. We will never receive on time. Why? Because in India there will be a lot of reasons for explanation. That is the thing. But in the Japan, it's not like that. Nana. In the Japan, they won't maintain the stock level. Whenever they require the quantity of raw material, just they will place the order before, they will receive the raw material on time. Nana. That is nothing but time discipline. Time discipline we can learn really from Japan only. Nana. Advantages. What are the advantages of just in time? It increased emphasis on supplier relationship. Why? Because when we are ordering the raw material on regular basis, so with one supplier only, it will create a supplier relationship also. A company without inventory does not want a supply system problem that creates a part shortage. This makes supplier relationships extremely important, Nana. In the just in time concept, we are not maintaining any extra stock, Nana. That is the reason we have to maintain a good relationship with the supplier. Good relationship with the supplier means what? Whenever we are purchasing the raw material, we have to make the payment on regular basis. Then only we can establish a good relationship with the supplier. Supplies comes in the regular interval throughout the production day. Supply is synchronized with the production demand, and optional amount of inventory is on hand at any point of time. When parts move directly from the truck to the point of assembly, need for storage facility is reduced. So he is saying that supply is happening at regular point of times on the directly production day. Means we are receiving the supply not before. We are receiving the supply of raw material on the production. Means when we are going to start the production, on the production day itself we are receiving the supply. So if that is the reason, so we need not to store that raw material, so we don't require storage space. When we don't require storage space, storage cost is reduced. Reduces the working capital requirement, a very little inventory is maintained. Why? Because whenever we require, just we are placing the order, we are not maintaining any material in advance. That is the reason working capital requirements will be very low. Minimum storage, minimizes the storage space. So storage space is also minimized. We don't require a large godowns and all. Very small space is enough for emergency purpose for storing the goods. Reduces the chance of inventory obsolescence or damage. When we are not maintaining the large quantity of raw material in the godowns, automatically it will reduce the obsolescence as well as damage to the material also. So these are the advantages of just in time, Nana. So just in time mainly focuses on what? Deliver the goods at a right time. Deliver the goods at a right time whenever they are needed. That is nothing but right quantity, right price, right place, right location. These are the things which we have to concentrate, Nana. So these are the advantages of just in time, Nana. Next one, Nana. Next concept do we have is inventory turnover ratio, Nana. So what do you mean by this inventory turnover ratio, Nana? What do you mean by this inventory turnover ratio? For what purpose we'll calculate this ratio? Basically, inventory turnover ratio is that nothing but the name itself meaning is there, Nana. Inventory turnover. Inventory turnover means how many number of times in a year an inventory is being rotated. How many number of times in a year an inventory is being rotated. If you are calculating the ratio, then that ratio is called as inventory turnover ratio. So see, inventory turnover signifies a ratio of the value of material consumed during a given period at the average level of inventory held during that period. This ratio is worked out on the basis of following formula. So he gave a formula here. Now, inventory turnover ratio is nothing but it is a ratio which expresses the relationship between average inventory level and the material consumed. Raw material consumed and average inventory level. It will express the relationship between these two terminology. That is only called as inventory turnover ratio. Inventory turnover ratio is equals to formula we can use value of raw material consumed during the period divided by value of average stock held during the period. Value of material consumed is equals to what is the formula, Nana? We know that, right? Value of material consumed is equals to opening stock of raw material plus purchases minus closing stock of raw material. This is the formula for value of material consumed. Value of material consumed is equals to what is the formula? Opening stock of raw material plus purchases minus closing stock of raw material. Second one, average stock level is equals to, what is the formula nana? Average stock level is equals to opening stock level plus closing stock level divided by 2. Opening stock level plus closing stock level divided by 2. This is the formula for average stock level. Average stock level is equals to opening stock level plus closing stock level divided by 2. This is the formula for what nana? Inventory turnover ratio. The purpose of inventory turnover ratio is to ascertain speed of movement of a particular item. A high ratio indicates that item is moving fast with minimum investment involved at any point of time. On the other point, low ratio indicates the slow moving item. Inventory turnover ratio, if the inventory turnover ratio is high, if the inventory turnover ratio is high, higher profits will be there. If the inventory turnover ratio is low, lower profits will be there generally. Why? Because when the inventory turnover ratio is high, the movement of the stock will be high and the profits also will be high. So give one example, sir. Simple example we will take of a milk packet only. If you are seeing a milk packet will move on daily basis. Suppose by selling a milk packet we are getting a profit of 3 rupees nana. We are getting a profit of 3 rupees by selling a milk packet. Milk packet will move on daily basis. So if you are taking an example of a milk packet, for one packet we are getting a profit of how much nana? 3 rupees per day. 3 into 30 means how much we are getting nana? 3 into 30 is nothing but we are getting a profit of almost how much now? 90 rupees profit we are getting out of milk packets for 1 month nana. Suppose if you are selling one agarbatti packet for 1 month, what is the maximum profit will get nana? 10 rupees or 20 rupees profit will get. So here inventory turnover ratio of milk packet is very high. Why? Because it is moving on daily basis. That is the reason higher profits the organization can generate. If you are seeing the inventory turnover ratio for a agarbatti packet, it's moving monthly once, that is low. Profits also will be lower nana. So this is the justification for inventory turnover ratio nana. Next one, inventory accounting and valuation nana. Inventory accounting and valuation. Okay na. So as per cost accounting standard 6 nana. Just now in the last classes also I told you, material receipts, valuation of compulsory cost accounting standards. From the cost accounting standards alone itself, compulsory he will ask 5 to 7 marks question nana. That too in the CMA Inter level we are having 4 nana. Cost accounting standard 6 material, cost accounting standard 7 employee cost, and cost accounting standard 10 direct expenses, cost accounting standard 3 overheads. From these 4 cost accounting standards nana, compulsory he will ask one cost accounting standard question. Okay na. Cost accounting standard is separate, chapters is separate, material cost chapter is separate, cost accounting standard 6 valuations is separate nana. Okay na. Keep in your mind, this weightage will be different and that weightage will be different. Cost accounting standard from this 4 compulsory he will ask one question. So this is a topic number 2.1.3 inventory accounting and valuation as per CAS 6 cost accounting standard 6 nana. This information is related to cost accounting standard 6 nana. Valuation of material receipts, when we are purchasing a raw material nana, how we have to value the receipts nana, how we have to value the receipts as per cost accounting standard 6 nana. The material receipt should be valued at a purchase price including duties and taxes. See here, the material receipt should be valued at a purchase price including, what are the things we have to include when we are purchasing a raw material? Duties and taxes, freight, inwards, insurance and other expenditure directly attributable to the procurement, net of trade discounts, rebates, taxes and duties refundable or to be credited by taxer authorities, that can be quantified with a reasonable accuracy at the time of acquisition. Okay na. So what is the meaning of this first sentence nana? Material receipt should be valued at, means when we are purchasing a raw material, how we have to value this nana. So I will give explanation, you can see here. valuation of raw material as per cost accounting standard 6 nana. Okay na. So valuation of raw material as per cost accounting standard 6 nana. First one. First one is trade discount. Trade discount already we discussed in the last classes also. What do you mean by trade discount? It is a discount which is offered by the seller when the quantity purchased is bulk quantity. When we are purchasing a bulk quantity, so the discount which is offered by the when we are purchasing in a bulk quantity, the discount which is offered by the seller is known as nothing but which discount, nana? Trade discount. So trade discount generally what we have to do, nana? We have to deduct from the purchase invoice. Trade discount. It is deducted from the purchase invoice, nana. Trade discount we have to deduct from the purchase invoice. Sir, suppose if it is already deducted, sir, we need not to do anything. If it is not deducted, then we have to deduct from the purchase invoice. Second one. Quantity discount. So what do you mean by this quantity discount, sir? Generally when we are purchasing 1000 kgs, suppose the quantity discount is 10%, means how many kgs we are going to receive? 1000 minus 10%, that is nothing but we are going to receive 900. If you are going to a shop, if you are purchasing 1000 kgs, means you will expect at least 1100 1200 extra you will expect. No one will take a discount, right? So what do you mean with this quantity discount, sir? Quantity discount is nothing but the value equivalent to that quantity will be deducted from the purchase price. Suppose we are purchasing 1000 kgs, price per kg is 10 rupees. Quantity discount is 10%. Quantity discount is 10% means how much? 1000 into 10% is nothing but how many kgs? 100 kgs. 100 into 10, that is nothing but what is the equivalent value? 1000 rupees. Means we have to minus the equivalent value of quantity. Equivalent value of quantity we have to minus. That will call it as a quantity discount. Equivalent value of quantity is deducted from purchase invoice. This is the valuation principle, nana. Third one. If they are giving cash discount, what we have to do now? If they are giving cash discount, then what we have to do? Basically, this cash discount is given for the prompt payments. So it is a pure finance item. We have to ignore it. It is a pure finance item. Ignore. We have to ignore it now. Fourth one, nana. Goods and service tax, nana, GST. You can see GST. Next one is tax, nana, goods and service tax. Before that we used to have VAT, nana, value added tax, but now this value added tax is replaced by GST, nana, goods and service tax. If input tax credit is available, if input tax credit, ITC is nothing but input tax credit. Input tax credit is available, how we have to deal? If input tax credit is not available, how we have to deal, nana? When input tax credit is available, when a supplier is registered under GST, nana. Okay, na? When a supplier is registered under GST, then only that person will be eligible for input tax credit, nana. So if the input tax credit is available, then we have to deduct from the purchase invoice. Why, sir? Why we have to deduct from the purchase invoice? Why? Because when he is getting a credit benefit from GST, he is getting benefit over there. That is the reason we have to deduct from purchase invoice. ITC not available. When input tax credit is not available, when a supplier is not registered under GST, when a supplier is not registered under GST, then he is not eligible for, he will be not eligible for the input tax credit. When the input tax credit is not available, then in that case we have to add to the purchase invoice, nana. Okay, na? So this is the thing. Next, nana, customs duty or excise duty. It is non-refundable tax. So it is a non-refundable tax. That is the reason we have to add it to the purchase invoice. And a customs duty or excise duty is a non-refundable tax. That is the reason we have to add to the purchase invoice, nana. Next, toll tax, insurance. It is added to the purchase invoice. Any toll tax, when we are importing a raw material from some foreign country, nana, so we have to bring that raw material. Suppose if it is imported in Chennai, from Chennai we are bringing through road, compulsory toll gates we have to pay toll tax. And when we are importing the raw material from a foreign country, compulsory we have to pay the insurance also, nana. If that is the case, compulsory it is added to the purchase invoice, nana. Okay, na? Next, rebate, subsidy, grant. Received. Rebate, subsidy, grant received. It is deducted from the purchase invoice. If any rebate or subsidy or grant is received, then it is to be deducted from the purchase invoice. Okay. So these are the points which you have to keep in your mind for the first point. And this is the explanation for valuation of material receipts as per cost accounting standard 6. First point number 1. Let us see further points. Another one more thing is there, freight inwards. Freight inwards is nothing but it is an expense which is incurred when we are purchasing the raw materials. In the last classes also we discussed in cost sheet. Freight inward. Freight inward is nothing but it's a transportation expense which we will incur at the time of purchase. That also we should include, nana. Next, nana. Point number 2. Finance cost incurred in connection with acquisition of materials shall not form part of material cost. Why? Because finance cost is a pure finance item. Finance cost is a what? Pure finance item. That is the reason we should not include that. Next one. self-manufactured materials. Self-manufactured materials means what? Sometimes what happens, instead of purchasing the raw materials from the open market, we will manufacture a raw materials by ourselves. Nana. Self-manufactured raw materials shall be valued including direct material cost, direct employee cost, expenses, factory overheads, share of administrative overheads relating to production, but excluding share of other administrative overheads, finance cost and marketing overheads. In case of captive consumption, the valuation will be according to the cost accounting standard 4. Okay, Nana. So in the case of self-manufactured raw materials, Nana, what are the items we have to include, Nana, at the time of purchase? We have to include raw material cost, we have to include direct employee cost, and we have to include factory overheads. We have to include the factory overheads only related to production and administrative overheads related to production. Only these are the items we have to include in the case of self-manufactured raw materials, Nana. Rest others we have to exclude, Nana. Next. Spares which are specific to an item of equipment shall not be taken to inventory but shall be capitalized along with the cost of specific equipment. Yes, generally spare parts which we will use, Nana, we will use the spare parts for manufacturing. Generally we will use this small spare parts for big machinery equipments. Whatever the spare parts which we are using for big equipments, that spare parts should not be accounted for inventory. Instead of taking them accounted for inventory, we have to capitalize along with the cost of the equipment, Nana. Normal loss, this is important, Nana. Normal loss or spoilage of material prior to the reaching of the factory or the places where the services are provided shall absorbed in the cost of balance materials net of amounts recoverable from the suppliers, insurers, carriers or recoveries from disposal, Nana. So what is the meaning of this sentence, Nana? If any normal loss happens, basically what is the definition of a normal loss, Nana? A normal loss is an unavoidable loss, Nana. A normal loss is an unavoidable loss which arises due to shrinkage, evaporation or otherwise due to some other reasons this loss will happen, Nana. Let's take an example of a petrol, Nana. If you're taking an example of a petrol, there are two type of losses we can see, Nana. One is normal loss, another one is abnormal loss, Nana. If it is a normal loss, Nana, when we are loading or unloading, certain percentage of petrol will get evaporated, Nana. Compulsory certain percentage of petrol will get evaporated in the case of when we are loading and unloading petrol, Nana. So if any normal loss happens, that normal loss what we have to do, Nana? That normal loss shall be observed in the cost of balance of materials of amounts, Nana. In the balance materials we have to observe that normal loss, Nana. And if any amount is recoverable from the supplier, that amount we have to minus, Nana. If any amount is recoverable from the supplier or disposal or supply, otherwise insurance companies, compulsory we have to minus that. Okay, Nana. We can take one example, Nana, for better understanding purpose. It is an unavoidable loss which arises due to evaporation, shrinkage, weight loss, etc. during production process. Treatment. Cost of normal loss is observed by the good units only. During the normal loss nana, price per unit will increase. Whenever there is a normal loss in the given question, whenever there is a normal loss nana in the given situation, price per unit will increase nana. How sir? I will show you now. Let's see how the cost of normal loss is observed by good units, how the price per unit will increase. I will show with the help of example. See here. Example. This is oil refinery nana. This is oil refinery which is located in Mumbai. This is oil refinery nana which is located in Mumbai. This is a petrol bunk nana which is located in Bangalore. So this is oil refinery which is located in Mumbai. This is a petrol bunk which is located in Bangalore nana. Okay na. Now this petrol bunk gave an order nana. This petrol bunk gave an order for 1000 liters of petrol. This petrol bunk gave an order for how much nana? 1000 liters of petrol at the rate rupees for 100 per liter. What is the rupees? What is the price per liter nana? Rupees 100 per liter. Normal loss during loading and unloading is 5% nana. What is the normal loss during the loading and unloading process nana? During the loading and unloading process 5%. Why? Because when we are loading and unloading the petrol, compulsory certain percentage of petrol will get evaporated nana. So when this petrol is getting evaporated, the evaporated petrol is a loss. That is a which loss nana? Normal loss. Suppose if you are exposing the petrol, that is the reason nana, in the petrol bunks they will pour the petrol inside they will open the cap and they will keep the filler inside the cap and they will fill the petrol nana. No one will try to pull the petrol by keeping your hands up nana. Why? Because when they are trying to fill by keeping a distance little gap, you can see during the summer season a lot of petrol smell will be coming outside, and you can sometimes whenever there is a high heat also you can see the evaporation also nana. During the high heat you can see the evaporation. Otherwise if you are taking 1 liter of petrol, you expose it to sunlight, after a period of half an hour the total petrol will get evaporated nana. Okay na. So the normal loss during the loading and unloading is how much percentage nana? 5% here. Okay na. So here now the truck, now the truck has filled the 1000 liters of petrol nana. Okay na. In this oil tanker they traveled throughout the Mumbai and they reached Bangalore nana. They reached Bangalore and now they unloaded nana. Now they unloaded. Loaded is how many liters nana? 1000 liters nana, minus normal loss. How much percentage nana? 5%. 5% is how many liters nana? 50 liters. So unloaded is how much nana here? 950 liters. Unloaded is how much nana? 950 liters. Here normal loss is 50 liters. So what is the cost of this 50 liters nana? 50 into 100 per liter. That is nothing but how much nana? 5000. The cost of normal loss is observed by good units only. Good units is how much nana? 950. What is the cost of normal loss? 5000. Now let us calculate cost per liter. Cost per liter is equals to 950 we received, 950 into 100 plus. What is the cost of normal loss? 5000 divided by how much it is unloaded? 950 liters. That is nothing but 1 lakh divided by 950. So that is nothing but how much, Nana? 105.263. Now you see here, Nana, when we purchased, what is the price per? Now if you observe here, what is the price per liter we purchased, Nana? 100 rupees. Now you see, what is the price per liter, Nana? 105. Price is increased or not increased? The price is increased by how much, Nana? 5.263. Why? Because the cost of normal loss will be beared by the good units. The cost of normal loss will be beared by which units, Nana? Good units. That is the reason the cost will increase, Nana. So this is the concept of normal loss, and this is the cost accounting treatment for normal loss, Nana. Okay, na? Next, Nana, let us move on to the next one. Next, losses due to shrinkage or evaporation and gain due to elongation or absorption of moisture, etc. before the material is received shall be absorbed in the material cost to the extent they are normal, with corresponding adjustment in the quantity. Just now we did the same thing now. The forex component of imported material, this and this represents the same, Nana. The forex component of imported cost of material shall be converted at the rate on the date of transaction. Any subsequent change in the exchange rate till the payment or otherwise shall not form part of material cost. Means when we are importing a raw material from a foreign country. Okay, na? So let's take one example, Nana, for understanding purpose. Suppose X Limited imported 1000 kgs from USA, Nana, on 31st May 2024, Nana. They imported on 31st May 2024 how many kgs, Nana? 31st May 2024 1000 kgs from USA. Okay, na? $1 is equals to 80 rupees on 31st May 2024. Suppose we are making the payment on 31st June 2024, Nana. We are making the payment on how much, which date, Nana? 30th June, 30th June 2024 we are making the payment. On that date, $1 rate is how much, Nana? 85 rupees. So on the date of import, the dollar rate is, on the date of transaction or on the date of import, the dollar rate is $1 is equals to 80 rupees, Nana. But on the date of payment, what is the dollar rate, Nana? 85. So which rate we have to consider for calculation of raw material cost? While calculation of raw material cost, Nana, we have to consider the price which is existed on the import date. Means this price we have to consider. Which price we have to consider? The price which the price which is existed on the date of import, Nana. Therefore, cost of raw material is equals to 1000 into 80, Nana. That is nothing but 80,000. So this is how we have to calculate in the case of forex imports. When we are importing a raw material from a foreign country, this is how we should value, Nana. Next, Nana. Any demurrage or detention charges or penalty levied by the transport or other authorities shall not form part of the cost of materials, Nana. So what do you mean by this demurrage, sir? What do you mean by this demurrage charges, or what do you mean by this detention charges? So in the Customs Act you will be learning, but here also it is, that's not an issue. Demurrage charges, what do you mean by this demurrage? Means suppose when we are importing a raw material from a foreign country, Okay na? The ship captain has informed us the arrival of inland port, means he has reached the Chennai port, and the ship captain informed that I have reached the Chennai port. Then it is the duty of the importer, means whoever they are importing, means it's our responsibility to take delivery of the goods within 24 hours after reaching the ship to the port. After the ship is reaching to the port, within 24 hours we have to take the delivery either for home consumption, or otherwise we have to deposit that goods into the public or private warehouses. That is our responsibility. But what we did, so ship captain has informed us, intentionally we have delayed from our side for 3 to 4 days. After 3 to 4 days I went to take the delivery. Now ship captain is saying that unnecessarily, because you did not unload the goods, that is the reason I have to stop my ship for 3 to 4 days without any carriage. So for that purpose, it is a penalty. Demurrage charges is a penalty levied. It is a penalty levied by the ship captain for delay in loading or unloading of goods into the ship. Now, if there is any delay of unloading or loading of goods from the ship, this is a penalty which is levied by the ship captain. That is called as a demurrage charges. Demurrage charges is a abnormal case. It is not, it happens due to our negligence. It happens due to our carelessness. That is the reason it is deducted. It will not form part of the cost of material. It is deducted from the purchase invoice. Detention charges. Detention charges is nothing but if you are trying to import a raw material without paying any tax to the government. In that case also they will detain that goods. So many cases we will be seeing smuggled goods. Now what do you mean by the smuggled goods? Means they are trying to import the goods into the country without paying the taxes. In that cases they will detain them and they will collect the taxes. Then if we are paying any detention charges for raw material, the detention charges also shall not form part of cost. Penalty levied, if there is any penalty generally it is levied for the violation of rules and regulations. If you are violating the rules and regulations, for that violation they will levy penalty. If any penalty is levied, that penalty also shall not form cost of the material. So this is also important. Subsidy or grant received, that also we have to deduct from the purchase invoice. Okay na? Next, valuation of material issue. Receipt, as of now cost accounting standard 6 we saw valuation of material receipt, means when we are receiving the material, what are the things we should include, what are the things we should exclude. Now we are seeing principles for valuation of issue of material, means while issuing the material, what are the principles we have to follow. As per cost accounting standard 6 or as follows: issues shall be valued using appropriate assumptions on cost flow. Example, we are having different methods now. First in first out method we have, lost in first out method we have, weighted average method we have, simple average we have, weighted moving average we have, market price method we have, standard price method we have. Like that we are having different methods. Whatever the method which you are following, that cost principles you have to follow. Now let us see. When materials are accounted, so issue of valuation for issue of materials is not that much important, but valuation of receipt of materials is very important. Compulsory he will frame one question for 5 marks. Compulsory he will frame one question for 5 marks definitely. When materials are accounted at standard cost, the price variances related to the materials shall be treated as a part of material cost. Okay na? So when the materials are accounted at a standard cost, any price variances is there, that price variances also we should consider. What do you mean with this price variance, sir? Yesterday we solved one question in cost sheet. Do you remember variance? Variance is nothing but difference between the standard and actual. So if there is a difference between the standard price and actual price, that is called price variance. Is nothing but difference between standard price minus actual price, SP minus AP, standard price minus actual price. Any abnormal cost is there, that should be excluded from the material cost. Wherever the material cost include, transportation cost should be determined as per cost accounting standard 5. Why? Because cost accounting standard 5 deals with the average cost of transportation. Material cost may include imputed cost not considered in financial accounts. In the beginning classes I told you, in the case of cost accounting we will consider both quantitative transactions as well as qualitative transactions. Imputed cost is nothing but what? Qualitative cost. That is also can be considered here. Self manufactured, same thing he will repeat, Nana. We will discuss these definitions, Nana. We have to discuss this definition. What do you mean by scrap? What do you mean by defective? Okay, now there are 4 things, Nana. Wastage, scrap, defective, spoilage. There are 4 definitions, Nana. There is a difference between these 4 definitions. What are those 4 definitions, Nana, that we will discuss in upcoming sessions? One is wastage, one is scrap, one is spoilage, one is defective. These 4 definitions are important, Nana. These 4 definitions are important, Nana. Okay, na? Next, there are several methods for issuing the materials, Nana. There are several methods available for issuing the materials. Under this one is cost price method, Nana. Under this cost price method, we are having 3 methods. One is first in, first out, last in, first out, base stock method, Nana. Under this specific price methods, we are having average price, simple average price, weighted average price, moving simple average, moving weighted average, Nana. Market price methods, we are having 2 methods, Nana. Replacement price, realizable price methods, Nana. Notional price methods, we are having standard price method, inflated price methods, Nana. Okay, na? Now let us discuss one by one method briefly, Nana, and we will solve the questions. Why? Because on all the methods we are having the questions, Nana, in CMA Inter level. Let us discuss one by one method in brief, Nana. First method, Nana, do we have is first in, first out method, Nana. First method do we have is what, Nana? First in, first out. What is this method, sir? First in, first out. First in, first out is nothing but whatever the raw materials which is received first, that should be issued first. Basically, this first in, first out method is used for perishable goods. Generally, this first in, first out method is followed for which goods, Nana? Perishable goods, means the items which is received first, it will be issued first, like that. It is the method of pricing, issue of materials in the order in which they are purchased. In the other words, the materials are issued in the order in which they arrive in the store, means the items which are receiving first will be issued first. This method is suitable, this method is considered suitable in the times of falling price because the material cost to charge at the production will be high, while the replacement cost of material will be low. In case of rising prices, this method is not suitable. So, MCQ question they will ask on this part. When this first in, first out method is suitable, this first in, first out method is suitable, Nana, in the case of falling prices, Nana. I will give one practical example, try to understand. Let's take an example of a vegetable vendor, Nana. Let's take an example of a vegetable vendor. There is a one vegetable vendor, Nana. He is dealing with tomatoes. Okay. He purchased 1000 kgs of tomato on 1st May. On 1st May 2024, he purchased 1000 kgs of tomato at the rate 100 rupees per kg. He purchased it at how much, Nana? At the rate 100 rupees per kg. Vegetable vendor has purchased 1000 kgs of tomato on 1st May 2024 at the rate rupees 100, Nana. Okay, na? Now, you know, tomato is a perishable good and non-perishable good. It is a perishable good. What is the lifetime of the tomato, Nana? The lifetime of the tomato will be a period of less than 10 to 15 days. And max to max, it will be there for how many days, Nana? 15 days we can store, not more than that. Okay, na? So, on the first day, he sold the tomato for 200 rupees per kg. He purchased at 100, but he sold at how much? 200 rupees. Why? Because in the beginning days, the tomato will be very fresh. So that he sold the tomato for 200 rupees. Next, second day he is selling, third day he is selling, fourth day he is selling. On the fifth day, tomato price has become 100 rupees. Sixth day he is selling, seventh day he is selling, eighth day he is selling, and ninth day also he is selling, Nana. On the ninth day, the tomato price is now 80 rupees only. Why? Because when the tomato started rotting, means the tomato is becoming old, the tomato is becoming rotting means that is nothing but it's becoming useless. The stage when it reaches nearby, the price will come down. When you are going to a vegetable vendor, you see fresh tomato, which is kacha pacha tomato, he will be telling 100 rupees, 200 rupees per kg. The tomato which is already in the rotten stage, rotten means you have to utilize the tomato within 1 or 2 days, otherwise it is waste. Those kind of tomatoes he will be selling 30 rupees, 40 rupees per kg. Why? What is the difference between this tomato and fresh tomato? Fresh tomato we can store for a period of 1 week to 10 days. That is the reason the cost is high. But seeing here, this tomato is already, it has been hold for a period of 1 week to 10 days. Means the lifetime is only another 2 to 3 days. That is the reason he will be selling at low price. Okay. Now you see here. Now from the market he will bring the fresh tomatoes. Daily basis, whenever he is selling, he will bring the fresh tomatoes. Whenever he is bringing the fresh tomatoes, before selling these fresh tomatoes, first he will try to sell the tomatoes which is already in the rotten stage. Why? Because fresh tomatoes he can sell at least for another next tomorrow or day after tomorrow he can sell at same price or more prices. But the rotten tomatoes, if he is not going to sell, that is going to become useless. His cost of investment is going to loss. That is the reason in the case of falling prices method, the method which is suitable is here is FIFO method. First in, first out. Not only that, if you are going to one bakery shop, see the bread packet, fresh bread packet he will be selling 100 rupees, 120 rupees. But if you see the bread packet is for 10 to 15 days older, if the date is a 10 to 15 days older, again that bread packet he will give 50% offer, one for one, get one by one offer he will be giving, and he will be selling the bread packet. Why? If he is not going to sell that bread packet within 1 or 2 days, again it is a waste product. He has to throw in the dustbin only. It is useless. So that is the reason first in first out method is suitable in the case when the prices are falling. That too perishable goods. Next, last in first out. Last in first out method is suitable for non-perishable goods. Last in first out method is suitable for what? Non-perishable goods. Non-perishable goods, and that too this method is suitable in the case of increasing prices. Last in first out method MCQ question frequently keep on asking in the exam. During the increasing prices, during the period of increasing prices, this method last in first out is suitable. Last in first out is nothing but the item which is received last, the items which is received last, that we will be selling first. Then what about the first received items, sir? He will not sell. He will store it for a longer period of time. More the period of time he is storing, the value will increase. Example, sir, you can take the wine. In the case of wine, the storage period is more. If the storage period it is a 50 years old, if it is 100 years old, the value of the wine will be more. If it is a latest, like 2 months, 3 months older, the price will be very low. Not only that, if you are going to a rice shop, there will be 2 types of rice. Like Sona Masuri rice will be there and steam rice also will be there. What is the difference between these 2 rice? They will look like same only, but what is the difference? Sona Masuri rice is nothing but the rice which is stored for a period of almost 1 year or 2 years older. That is the reason more the number of days if you are storing the rice, the value of the rice will increase. Steam rice is nothing but it's a new rice which is boiled and which has come out freshly. That we will call it as a steam rice. That price will be low. So that is the reason last in first out method is suitable in the case of increasing prices. Why increasing prices? The more the number of period you are storing, the price will increase. Next, base stock method. And under this base stock method we will use either for this base stock method we will use either for LIFO or FIFO. This base stock method will use for LIFO or FIFO. Under this base stock method we will maintain a base stock. Base stock is nothing but we will keep a certain quantity as a base. And at any point of time we will not even touch this base. At any point of time we will not even touch this base. So example, sir, it's a very typical example. I will give you, try to understand in the base stock method. Base stock method, it's a very typical example, try to understand. Suppose there is a one slurry pipeline. Pipeline, slurry pipeline is there. This slurry pipeline is used for transporting petrol or diesel or crude oil from one oil refinery to another oil refinery. Generally, these oil refineries will be located at different places. They will transport this oil from one oil refinery to another oil refinery, not by road. They will transport through pipes. So when they are transporting through pipe, immediately if you open a tap, water tap, Water tap, if you're opening a tap, the water will come immediately, right, outside. But the tanker is somewhere in the upper 5th floor or 6th floor. But if you're opening a tap, within a split of seconds, the water will come out. How? Because the water is already stored in the pipe. That water which is stored in the pipe, or the petrol which is stored in that slurry pipe, that is only called as base stock. That stock will always remains. That stock will always remains. We won't touch. If that stock is, we see the water is coming out, immediately the fresh water from the tank, again it will fill into that pipe. Fresh water from the tank, again it will fill into the pipe. That is the reason during the summer season you open the tap, immediately the hot water will come out for almost 2 to 3 minutes. Why? The total water which is there in the pipe should get empty. After that again some cool water will be coming out from the tank. So that stock which is there stored in that pipe, that will call it as a base stock. Base stock we will never touch it under the FIFO method or LIFO method. Without touching the base stock, we will issue the other stocks. That is called as a base stock method. Next is a specific price method. And a specific price method is nothing but at the time of issue, they will define some specific price. Means they will not consider purchase price. They will not consider purchase price. At the time of issue, they will consider or they will calculate some specific prices. So at the time of issue of raw material, we will consider these prices only. Simple average, weighted average. Simple average is nothing but without assigning the weights, we will calculate the average price based on all the issues. Weighted average is nothing but we will take the weights into consideration, we will calculate the average price. This is weighted average method. Comparing to the simple average, the weighted average method is a little bit complicated. They gave the formula to calculate weighted average price. Weighted average price is nothing but material issue price is equals to total cost divided by total quantity. That is the formula. Next, moving simple average, moving weighted average method. Moving simple average, moving weighted average. This is a little bit different and a complicated method. Listen carefully. Under this method, the rate for material issue is determined by dividing total of the periodic simple average prices of a given number of periods by the number of periods. Simple, the simple average price, what they will do is they will take the total issue price for different months. Different months they will take all the prices and they will do the average total number of prices by total prices by total number of prices. Suppose in the May month 5 issues, June month 10 issues. So May 5, June 10, that is nothing but totally how much? 15 issues are there. So 15 prices divided by total number of prices is how much? 15 divided by 15. That is how they will calculate the simple moving simple average. Next, moving weighted average, they will calculate total periodic weighted average price by total number of periods. They will take the total periodic weighted average price divided by total number of periods. While solving the questions, you will understand these methods. Theoretically, it's little bit complicated only, but while solving the questions, you will understand it's easy only. Replacement price method. Replacement price method is nothing but at the time of issue of raw materials, instead of purchase price, we will take replacement price. Instead of purchase price, we will take replacement price at the time of issue. Next, realizable price method. Realizable price is nothing but what is the value we can realize from the market. Suppose we purchased at 100 rupees 1 kg of raw material. 1 kg of raw material we purchased how much? 100 rupees. Now we are going to, at the time of issue, what is the price which is existed for that material? Suppose if I am selling that raw material, I am able to fetch 90 rupees only. That 90 rupees is called as what? Realizable price. Next, standard price method. Under the standard price method, based on the standards, they will calculate one standard price. Inflated price is nothing but whatever the price which is increased, that price we will add and we will calculate. These are the different methods we have. Okay. Next, already these things we did in the cost sheet. Prime cost plus variables at total cost. These are the different methods. So valuation of stock. Valuation of stock at which method? Prime cost method. Prime cost means we will value the issue price at prime cost. We will value the issue price at prime cost plus variable cost. Total cost means variable cost plus fixed cost, both. Next, physical verification, slow and non-moving treatment and treatment of losses. These things just you can go through, not that much important. Next topic number 2.1.5 nana. Scrap, spoilage, defective, wastage. These four definitions are important nana. What do you mean by scrap, or what do you mean by spoilage? What do you mean by defective? What do you mean by wastage nana? Abnormal and normal wastage of materials also. So normal is nothing but unavoidable loss nana. Abnormal is nothing but what nana? Abnormal is it is a avoidable loss. Normal loss definition already we saw in the previous session. So what is the normal loss definition? And normal loss is nothing but it is an unavoidable loss. Means whatever the precautions you may take, but still you cannot avoid that loss. Example, petrol we took na, that is normal loss. Abnormal loss means what? It is a avoidable loss which arises due to carelessness, negligence, mismanagement in the organization. These abnormal losses will arise due to which reasons nana? Abnormal losses generally arises due to carelessness, negligence or mismanagement in the organization nana. Due to these reasons this abnormal loss will happen nana. Okay na? So what is the accounting treatment for normal loss? What is the accounting treatment for abnormal loss nana? Okay na? Let us see. Already we saw the normal loss treatment, right? So we saw the normal loss treatment. Now what is the normal loss treatment? And otherwise let us discuss once again if it is. Normal loss, abnormal loss. Normal loss is unavoidable in nature nana, whereas abnormal loss is avoidable in nature nana. If you take proper precaution, you can avoid abnormal loss. Second nana, arises due to evaporation, shrinkage, loss of weight, etc. It arises due to evaporation, shrinkage and loss of weight, etc. nana. Whereas in the case of abnormal loss, nana, arises due to carelessness, negligence, mismanagement, etc. nana. Here treatment nana. Cost of normal loss is absorbed by good units nana. Cost of normal loss is observed by good units. In the case of abnormal loss, treatment nana. Cost of abnormal loss is calculated separately and charged to costing P&L account. So this is the treatment of abnormal loss. In abnormal loss, the cost of abnormal loss is calculated separately and it will be charged to the costing P&L account. So this is the differences between normal loss and abnormal loss. Sir, can you say an example for abnormal loss? Fire accident. Fire accident is an example for what? Abnormal loss. Not only fire accident, damage, sudden breakdown, machine breakdown, all these are the examples of abnormal losses. Okay na? So you can go through the theory. So just I gave in a shortcut, you can go through that theory. Next, definition of waste. What do you mean by waste, sir? Let us see what do you mean by waste, Nana? What is the definition of waste? This is the residue. This is the residue such as smoke, dust, gases, slag, etc., which arises in the course of manufacturing process and practically no measurable sale or utility value. In certain type of process or operations, some material physically disappears on the account of shrinkage, evaporation, etc., with the result that quantity of output is less than the input. Such wastage is determined as invisible waste. The residual, instead of fetching any value, creates a problem for its disposal, which entails further cost. Special arrangements have to be made for the disposal and refuse effluent, obnoxious gases, etc. Simple definition, Nana. Wastage. Wastage is nothing but it arises due to what, Nana? It arises sometimes evaporation, shrinkage, smoke, dust, gases. Due to all these reasons, this wastage will arise, Nana. So this wastage will not have any realizable value, Nana. Evaporation means it will already evaporate. So what value will get? What value will fetch? Waste means dust will be there. Who will purchase dust? Right? When we are constructing a house, generally they will keep tarpaul and they will construct. What is the reason they will keep tarpaul? Well, they are using the raw materials like cement, sand, and all. Lot of dust will be coming out of that. The dust will come and sit on the tarpaul. If you go and touch the tarpaul, you will understand. Suppose if you are parking your car outside, you keep a one tarpaul on that car. Parking cover on that car. After 10 or 15 days and you touch that cover, parking cover, there will be a lot of dust on that parking cover will be there. Who will purchase that dust? Sometimes in the case of us, like medicinal companies and chemical companies, they will release gases into the air. That gases who will purchase? Only we can feel smell only in the case of gases. Who will purchase that? So wastage is nothing but it arises during the production process in the form of either smoke, either gas, either dust, evaporation, shrinkage. So this, when it types, the waste may arise. Whatever the wastage it is arising, the scrap value is 0, Nana. The realizable scrap value is what, Nana? For the wastage is 0. Now, what is the accounting treatment for wastage, Nana? As waste has no practical value, its accounting treatment is relatively simple. The effect of the waste is to reduce the quantity of the output, Nana. Definitely, because when the wastage is there in the given input will not equal to output here. Input will not equals to output here. When the input is not equals to output, the difference weight, whatever it is there, the difference cost is absorbed by the good units, Nana. Whatever the difference cost is there, the difference cost will be absorbed by what, Nana? Good units. That's what. In order to arrive the unit cost of the process, operation, or job, the total cost of the process, it is distributed over the reduce the units of good operation only. There is nothing but so whatever the waste is there, that waste we have to observe into the good units. The cost of abnormal waste should be excluded from the total cost and charged to the profit and loss account. Just now I told you, if there is any abnormal waste, that cost of abnormal waste is calculated separately and we will be charging where, Nana? To the profit and loss account. Next, Nana. Scrap is nothing but this is not intentionally when we are processing. Sometimes what happens, scrap also will arise. Scrap also will arise. If you are taking an example of a crude oil as an input, if you are giving crude oil as an input, crude oil means crude oil, if you are giving it as an input, the output will be certain products. Means intentional products is generally from the crude oil will expect petrol, diesel, lubricant, oils. These are the expected products from the crude oil, Nana. But along with the main products, there are certain byproducts also will arise. Along with the main products, some incidental small byproducts also will arise. That byproducts only here will call it as a scrap. We will call it as a scrap, Nana. Not only sugarcane juice. What is the main reason we'll extract sugarcane? From the sugarcane we want to extract sugarcane juice. But when we are filtering the sugarcane juice, molasses will happen. When we are extracting that sugarcane juice and when we are converting that sugarcane juice into either jaggery or sugar, molasses will happen. That molasses also will have some certain value. That value is called as a scrap value. Not only that, when we are laying marbles, When we are laying marbles in your house, complete 100% of marbles cannot be used. Certain marble pieces will become waste. That marble pieces we can sell in the market. Yes, whatever the broken marble pieces is there, that marble pieces we can sell in the market. That will be purchased by Daba people, they will be using for gardening purpose and all. To walking lanes, gardening purpose, they will use these broken marble pieces. That is called as what? Scrap. Let us see the definition here. This is also in the form of incidental material residue coming out from certain types of manufacturing process. Generally, this scrap will be coming out from the manufacturing process, but it is usually in small amount. This scrap will be in small amount, has low measurable utility or low market value. Recover without further processing. This is scrap, we won't further process anything, just we will sell in the market. We will go to the market and we will sell in the market. Whatever the value it is fetched, we will bring that value. That's all. That marble stones, what we will do further, we will bring that pieces and we will attach and we will make it one marble. It's not possible. It is not possible. So that is the reason that broken marble pieces will go to the market. We will sell. Whatever the value is fetched, we will bring that value. Numerous examples of scrap may be given. Scrap may arise in the form of turnings, borings, trimmings, fillings, shavings, etc. from the metals on which machine operations are carried out. When you are carrying the metal operation means, you see, simple example I will tell you. You will be not having an idea of all these words, but a simple example I will tell you, try to understand. Iron bars will be there. You check in the YouTube also, you will get the videos. Iron bars, they will convert into certain molding shapes. When they are converting into molding shape, they will trim with some trimmer. They will be trimming with some trimmer. When they are trimming with the trimmer, certain small iron trims will come out. That iron trimming, whatever it is coming out, that iron trim we can sell in the market. That is having a scrap value. Next, sawdust trimmings in the timber industry also we can see. In the case of timber industry, when they are converting that wood into wooden table and all, so that wooden powder will be there. That powder, or the timber powder will be there. Rosewood powder will be there. That will be used for different places, different purposes. They will use Nana. So there are so many examples for scrap. Simple example is scrap, just to try to understand. A scrap is the incidental residue. It is a incidental residue which is coming out during the manufacturing process, not intentionally, but unintentionally it will come out. Like example, crude oil, if you see, what is the incidental scrap which will come out? Kerosene and tar. Tar will be used for laying roads. Kerosene before we used to use, but nowadays it is banned because of more smoke and more air pollution. That is the reason it is banned now, usage of kerosene, but still people are using. But tar they will be using for laying the roads. That is nothing but a scrap which we will get out of crude oil. Main products we will get out of the crude oil is nothing but petrol, diesel, lubricant. So what is the accounting treatment of scrap, Nana? Sales credited to the revenue. Sales credited to the revenue is nothing but whatever the scrap we are selling, we will get some certain amount. That amount we have to take and we have to add it to the main value. In this method, the scrap is not a cost. Scrap is not a cost and its value does not therefore appear separately in the cost accounts, Nana. Only quantitative record of the scrap, what we will do, whatever the amount which we are realizing from the scrap, that just we will take and we will add it to the main value, Nana. So this is the accounting treatment of scrap, Nana. Next, these are different methods, Nana. Credit to overheads, credit to jobs, transfer to other jobs. These are the different methods, Nana. Not required all these things. Just you can ignore also. There is no issue. Next, Nana, control of scrap. Control of scrap is nothing but this is not that much important, but we can still go through, Nana. Scrap is also an unavoidable residue, Nana. Scrap also we cannot avoid. Why? Because compulsory, if you are giving input as 100, complete output 100, we will not get finished goods, Nana. There are certain residual items also which we will get. That is the reason scrap is also unavoidable residue material arising out of the production process, Nana. The basic difference between the scrap and waste we can see. In the case of waste, Nana, there won't be any realizable value in the market. But in the case of scrap, at least we can get some value in the market, Nana. Okay, na? That part is not required. Next definition on a spoilage. What do you mean by this spoilage, sir? Spoilage is nothing but what happens when we are trying to manufacture a finished product, Nana. Unfortunately, what happens during some times, the product will get damaged during the production process. the product will get damaged during the production process. That is called as a which product? Spoilage product. That product called as a spoilage product. These products, what we will do is without further processing, this is spoilage products, without further processing, directly we will sell in the market. We can see here, when the production does not come up to the standard specification or quality, it has to be rejected outright. The components or materials so damaged in the manufacturing process that they cannot be brought back to the original stage. So some spoiled work may be sold as a seconds, but in most cases the entire production is sold for small value in the form of a scrap or treated as a waste. It has no market value. Spoilage involves not only loss of material but also labor, manufacturing overhead incurred up to the stage when the spoilage is incurred. In a simple language, spoilage is nothing but when the product, when we are processing raw material or converting into finished good, when the product is not up to the mark, when the product is not up to the mark, we cannot bring that product into the original stage. Simple example I will tell you, try to understand for spoilage. So spoilage products we cannot further process it, or we cannot further rectify the spoilage work. Examples are, you take an example of a saree. If you are taking an example of a saree, they required there when they are manufacturing the saree, they require yellow threads, red threads and green threads. First yellow, next red, next green. Unfortunately in the machine what happened, first yellow it came in the saree, next red it came, next again yellow came, next again it came green. That is nothing but one thread it has been extra, one thread it has been come extra, but output will be different look. The output will be different look. That is called as a damaged piece. That is called as which is damaged piece. Unnecessarily the thread has come in the middle. So when we are seeing in the overview of that saree will not look like a final output. It will look like a some odd. In that case, that is called as a spoilage product. That saree is called as a spoilage product. We cannot remove threads again and we cannot start from the beginning. We cannot remove the complete threads from that saree and we cannot start our work from the beginning. That is called as a spoilage products. Not only that, if you are seeing a shirt, so when we are seeing in the shirt also, when we are stitching a shirt, unfortunately what happened, due to some more heat power, the shirt has become compressed. The shirt has become compressed. So when the shirt has become compressed, again you cannot bring into the original stage. When you are trying to bring into the original stage, it will look like elastic. It will look like an elastic or it will look like a odd. You cannot further rectify the damage also. Those kind of products will call it as a spoilage products. Sometimes when we are selling in the market, spoilage products may have certain value. Sometimes when we are selling in the market, spoilage products may not have certain value. Okay na? When it is having a certain value, we will treat it as a waste. When it does not have a certain when it is having a certain value, we will treat it as a scrap. When it does not have a certain value, we will treat it as a waste. Next, what is the accounting and control of spoilage? Spoilage arises when the production output is damaged in such manner and such extent that it cannot be used for original purpose which it is designed, but it is to be disposed of in suitable manner without further processing it. The distinction between the scrap and spoilage work is nothing but scrap is nothing but an incidental residue which is appearing in the manufacturing process. Spoilage is nothing but when the product is not up to the mark. When the product is not up to the mark, that we will call it as a spoilage. That is the difference between the spoilage and this thing. Next, another one more definition is missing, defective here. What do you mean by this defective, sir? Defective is nothing but you will be seeing in the certain places the refurbished products, correct? Refurbished products, yeah. Defective is nothing but when the product is not up to the specification. When the product is not up to the specification, means when we are during the production process, when a product is not up to the specification or certain portion of the product has been damaged, then what they will do, they will replace that portion with a new portion. Those kind of products are called as what? Defective products. We can see in the case of when you are going for Cashify or some other places, you can see refurbished products. Refurbished products is nothing but they will bring it, the phone, if you are purchasing one Apple phone, it will look like a very good, excellent new phone only, but the price will be low. What is the reason? That product is a defective piece. Defective piece means what? Defective piece is nothing but suppose mic is not working. Someone is calling, I am talking here, but he is not able to hear. Why? Because receiver is not working. Then I went to the showroom and exchanged my phone with a new. It is under warranty. I went to the showroom and exchanged it. They realized that this phone is a defective piece. Then what they will do? They will send it as a scrap. They will sell it as a scrap. No. Now what they will do is they replace the part which is not working with a good part, and they will sell again as a refurbished product. So that is called as a defective. In the case of defective, if the product is not up to the specification, if the product is not up to the mark, still we can sell this product by rectifying the defective portion. We can sell this product into the market. Basically these products are called as a refurbished products, they will call it as. Next, treatment of packing cost already we discussed. Packing cost already while explaining the cost sheet only I gave you primary packing, secondary packing. Primary packing will become a part of which cost? Prime cost. And the secondary packing will become a part of which cost? Secondary packing will become a part of selling and distribution overheads. Treatment of tools cost, this is not required. Capitalization, revaluation and all. Next, treatment of discount already we discussed. Trade discount and cash discount already we have discussed that. This also not required treatment. This also slow moving and non moving and provision to write down value, this is also not required. It's repeated actually not required. Next, we can move on to the practical questions. So practical questions under material cost. Material cost weightage wise, most of the times he will be asking the practical questions only. That too, there are two topics which he will be frequently asking in the exam. One is EOQ, economic order quantity. One is stock levels, and inventory turnover ratio. These are the three topics frequently he will be keep on asking in the exam. Compulsory examination point of view, 7 to 8 marks is the weightage from this chapter. Then what about the theory? Sir, there is a lot of theory stuff in this chapter. Yes, theory is also there. Theory he may ask for 3 to 4 marks. Sometimes he will ask, sometimes he will not even ask theory. He will ask in the MCQ questions. Either he will ask in the MCQ, either he will ask in the theoretical questions. Possibility is this from the material cost. Material cost max to max 90% practical questions only. Theoretical questions is a very less weightage. See illustration number 1. Calculate the economic order quantity from the following information. So they are asking us to calculate the EOQ, economic order quantity from the following information, and also state the number of orders to be placed in a year. He is asking us to calculate the how many number of orders we have to place in 1 year also. Okay, let us see. Consumption of materials per annum, that is nothing but what? This is annual demand is equals to 10,000 kgs. Annual demand is nothing but how much? 10,000 kgs. Next, ordering cost per order. What is the ordering cost for one order? To place one order, what is the ordering cost? 50 rupees. That is nothing but ordering cost per order is equals to 50 rupees. Next, cost per kg of raw material. What is the cost per 1 kg of raw material? 2 rupees. Storage cost. Storage cost is nothing but what? Carrying cost is 8% on average inventory. What is the storage cost? 8% per average inventory. Always carrying cost is calculated on the cost per kg of raw materials. Storage cost is always calculated on what? Cost per price, cost per kg of raw materials or cost per unit of raw material. On that we will calculate this storage cost. So carrying cost is equals to how much? They gave price per kg is 2 into what is the percentage? He said 8%. 2 into 8%. That is nothing but how much? 0.16. So EOQ is equals to what is the formula? Under root 2AO by C. 2 into 10,000 into 50 divided by 0.16. First you have to calculate inside, then later you have to apply the bracket. 2 into 10,000 into 50 divided by 0.16. Then later you have to apply the square root. So how much EOQ is equals to 2500 kgs. EOQ is equals to how many kgs? 2500 kgs. Next, what is the second question he asked? How many number of orders is to be placed? How many number of orders is to be placed in a year? So how many number of orders is to be placed in a year is equal to, what is the formula? Yesterday we discussed time gap between how many number of orders number of orders we placed in a year is equal to, what is the formula? Annual demand divided by EOQ. What is the annual demand, Nana? 10,000 divided by what is the EOQ, Nana? 2,500. So how many number of orders we have to place, Nana? 4 orders per year. How many number of orders, Nana? 4 orders. Suppose in the given question, if he is asking you what is the time gap between 2 orders? Time gap between he did not ask this question here, but suppose in the exam he is asking what is the time gap between 2 orders? Time gap between 2 orders is equal to, what is the formula, Nana? 12 months divided by 4. That is nothing but 3 months. For every 3 months once we have to place a order. For every 3 months once we have to place a order. That is the meaning. Time gap between 2 orders means what is the time gap between first order and second order? Time gap between first order and second order is how many months, Nana? 3 months. For every 3 months once we have to place one order, Nana. That is called as the time gap between 2 orders. Next, Nana. Illustration number 2. The average annual consumption of a material is 18,250 units. That is nothing but A is equals to how many units, Nana? 18,250 units, Nana. At a price of rupees 36.5 per unit. That is nothing but what is the cost per unit, Nana? 36.5. The storage cost is on an average 20% on an average inventory. So what is the C, Nana? Carrying cost 20%. C is equals to 36.5 into 20%. That is nothing but 7.3. Average inventory and the cost of placing an order. Ordering cost per order is how much, Nana? 50 rupees. We have A, we have O, we have C, Nana. Then just we have to apply in the formula, Nana. If you apply in the formula, what is the resultant answer, Nana? 500 units EOQ. Economic order quantity is equals to 500 units. But be careful in the exam, Nana. Storage cost sometimes he will tell per month, Nana. When he is giving, suppose this 20% is saying per month. First, let us assume, suppose this he is saying storage cost is 20% on an average inventory per month he is saying. Then how to calculate C? C is what, Nana? Carrying cost per unit. Here C. Per annum. But in the given question, per month, we have to convert into per annum. How you will convert? First per month is how much? 7.3 into 12. So we have to take C is equals to how much, Nana? 87.6. 87.6, Nana. So that this is how we have to calculate. Sometimes in the examination this also will happen, Nana. In the examination what happens is sometimes compulsory he will ask, Nana. Per month he will give. If he is giving per month carrying cost, if the storage cost or carrying cost is given per month, we have to convert into per annum, Nana. So this you have to remember. Okay. Next, Nana. The components A and B are used as follows. They are giving components. There are 2 components. One is A, another one is what, Nana? B. Normal usage. Normal usage is nothing but average consumption, Nana. Normal usage is not usage or consumption, both are same, Nana. Usage or consumption, both are same language. So normal usage is nothing but average usage. What is the average usage, Nana? 300 units per week each. What is the maximum usage, Nana? 450 units per each week. Minimum usage is how much, Nana? 150 units per week each. So always remember, Nana. So while solving the stock level questions, Nana, first you have to arrange the data, Nana. You have to arrange the data in such a way. I will show you. You have to arrange the data in table form. If you are arranging the data in table form, applying in the formulas is a very easy thing. Applying in the formulas is a very easy thing. See here how I am arranging the data. First minimum, next average, next maximum. First one is, see here, first one is usage. Minimum, how much he gave? 300. Maximum, how much he gave? 450. Sorry, minimum how much he gave, Nana? 150. Average how much he gave? 300. Maximum how much he gave? 450. Do you know what is the formula of average? Minimum plus maximum by 2. 450 plus 150 divided by 2, that is nothing but how much nana? 600 by 2, 300. One time what happened, do you know, in the examination? So generally if he is giving minimum, average, maximum, whatever the values he is giving, that you have to take. In one attempt, what happened, do you know? So people knows the formula average is equals to minimum plus maximum by 2. In one attempt what happened, like this they give. They gave average 200. Okay na? So everyone what they did, 450 plus 150, 600 by 2 is nothing but 300. Array question paper printing mistake. They thought everyone question paper printing mistake, and they corrected 200 as a 300 and they wrote an assumption. In the question paper there is a printing mistake of average stock is 300, like that. So like that they wrote an assumption and they did calculations also. Nana. In that attempt what happened is, unfortunately everyone has lost the marks. Institute has given intentionally. We know 300, but institute has given intentionally how much, Nana? 200 only. When they are giving some value, we have to take that value. When they are not giving any value, they give question mark here. They did not give any value. When they are giving some value, we have to take that value only. Suppose here they did not give any value. If they did not give any value, now you have to calculate average. 450 plus 150 by 2, that is nothing but how much? 300. Understood? When they are giving some figures, that figures only should take for calculation purpose. If they are not giving any figure, then that is the case, you have to calculate the average, Nana. Otherwise we should not calculate. Okay na? Next, Nana, they gave reorder quantity. Just we can write not required here. Reorder period they gave, Nana, for A. Reorder period or lead time, both are same, Nana, meaning. Reorder period or lead time, both are same, Nana. Okay na? Reorder period for A. What is the reorder period for A they gave, Nana? 4 to 6 weeks. What is the meaning of this 4 to 6? 4 is minimum, maximum is 6. 4 is minimum and maximum is how much, Nana? 6. Okay na? 4 is minimum and maximum is how much, Nana? 6. Then how much is the average, sir? 6 plus 4, 10 divided by 2. Fine. Got it, ma? Next, for B, reorder period. For B, what is the reorder period they give? 2 to 4 weeks. 2, 4. 4 plus 2 by 6. 4 plus 2, 6 by 2, 3. This is the reorder period, Nana. Minimum, average, maximum. So you got a minimum, average, maximum data. Just directly you can apply in the formulas, Nana. Calculate for each component. They are asking us to calculate for each component, Nana. Okay, na? First question, what is the first question, Nana? Reorder level. Reorder level is equal to what is the formula, Nana? Maximum consumption into maximum reorder period. I will show you for one component. Another component you can calculate, Nana. Reorder level. Reorder level is equals to what is the formula? Reorder level is equals to maximum consumption into maximum lead time. So what is the maximum consumption they gave, Nana? 450. And for component A, what is the maximum period, Nana? 6. 450 into 6. So reorder level is equals to how many units, Nana? 2700 units, Nana. Okay, na? Next, Nana. What is the second question he is asking, Nana? Minimum level. What is the second question he is asking, Nana? Minimum level. Minimum level is equals to what is the formula, Nana? We know, right? Minimum level is equals to what is the formula, Nana? Next one, Nana. Let us see. Next one is minimum level. Minimum level is equals to what is the formula, Nana? Reorder level minus. What is the formula, Nana? Reorder level minus normal consumption, average consumption. Normal or average, both are same. reorder level minus average consumption into average lead time. What is the average consumption, Nana? 300. What is the average lead time, Nana? 5. Reorder level already we calculated, na? So same we can utilize here. So minimum level is equals to reorder level minus reorder level is how much, Nana? 2700 minus average consumption into average lead time. What is the average consumption, Nana? 300. What is the average lead time for A? 5. 300 into 5, 1500. So 2700 minus 1500, that is nothing but how many units, Nana? 1200 units. Minimum level is equals to how many units, Nana? 1200 units, Nana. Next, third one. What is the third question he is asking, Nana? Maximum level. What is the third question he is asking, Nana? Maximum level. Maximum level is equals to what is the formula? Reorder level plus reorder quantity minus minimum consumption into minimum lead time. This is the formula. So reorder level already we calculated, Nana. How much? 2700 plus reorder quantity for component A, which is already given in the question, na? See here. Reorder quantity which is already given in the question, na? Reorder quantity for A is how much? 2400 plus minimum consumption is how much? 150 into 4. 2400 minus minimum consumption is 150, lead time is how much, Nana? 4. So 2700 plus 2400 minus 600. So that is nothing but how many units, Nana? Maximum level 4500 units, Nana. This is the maximum level. Next, question number 4. What did he ask, Nana? Average stock level, Nana. Average stock level is equals to what is the formula? Minimum level plus maximum level divided by 2. Minimum level is how much? 1200 plus maximum level is how much? 4500 divided by 2. That is nothing but how many units, Nana? 2850 units, Nana. That is the average level. Okay, na? Same way we have to calculate for component B also. Now we calculated for component A, na? Now let's calculate for component B also, Nana. Okay, na? For the component B, what is the first one, Nana? Reorder level. Reorder level is equals to what is the formula, Nana? Maximum consumption into maximum lead time. What is the maximum consumption? 450. And what is the maximum lead time? 4. 450 into 4, Nana. $1800 units, Nana. Second one. Minimum level, Nana. Minimum level is equals to what is the formula? Reorder level minus average consumption. Minimum level is equals to reorder level minus average consumption into average lead time. So what is the reorder level, Nana? Already we calculated here, right? So that is nothing but how much, Nana? 1800 minus average consumption into average lead time. Let us see here. Average consumption is how much? 300 into lead time is how much? 3. 1800 minus 900 is nothing but 900 units, Nana. Next, third one is maximum level. Maximum level is equals to what is the formula? Reorder level plus reorder quantity. What is the reorder quantity they gave? 3600 minus what is the formula for maximum? Minimum consumption into minimum lead time. What is the minimum consumption they gave? 150 into what is the minimum lead time they gave? 2. 1800 plus 3600 minus 300. So that is nothing but how much, Nana? 5100 units. That is the maximum level, Nana. Fourth one, average level is equals to 900 plus 5100 by 2, that is nothing but 3000 units. That's all, Nana. So these are the different stock levels, Nana, which we calculated. Just formula based. You have to learn the formula. First and the foremost thing is what I said. You have to make this table, Nana. This is important here. Just you have to arrange the data in this table: minimum, average, maximum. While solving the question also, remember whatever the data which is given in the question, that you have to take. If some data average is not given, if it is not given, then we have to calculate. See here, reorder period we calculated or not? It's not given for A also, it's not given for B also, we calculated. Na? When it is not given in the question, then only we should calculate. If it's already given in the question, we have to use the same data, Nana. That's all. So this is the question, Nana. Next, Nana, illustration number 4, Nana. Okay, na? Illustration number 4, we have to calculate inventory turnover ratio from the following, Nana. What we have to calculate, Nana? We have to calculate the inventory turnover ratio from the following. So to calculate the inventory turnover ratio, what is the formula, Nana? Value of material consumed during the period divided by value of average stock held during the period, right? So value of material consumed during the period is already given in the question. Material consumed, how much did they give, Nana? 78,000. Next, they give opening stock and they give closing stock. So our value of average is equals to opening plus closing by 2. So what is the opening value? 10,000. What is the closing value? 16,000. 10,000 plus 16,000 by 2. That is nothing but how much, Nana? 13,000. So inventory turnover ratio. Inventory turnover ratio is equals to material consumed divided by, so average stock level. That is nothing but how many times, Nana? 6 times. Suppose if you are writing 6, if you are not writing times, what happens? Or half mark like that, they will cut, Nana. That's all. Nothing will happen. Half mark they will cut. Okay, na? Compulsory we have to indicate, na? Turnover ratio is always indicated by the number of times. Inventory turnover ratio is always indicated by what, Nana? Number of times. Very easy question. Sometimes value of material consumed will be not given in the question. Then what you will do? You have to apply the formula. You know the formula, right? What is the formula? Value of material consumed is equals to opening stock plus purchases minus closing stock of raw material. That is the formula we have to use, Nana. Next, Nana. Illustration number 5, Nana. Next, Nana. Prepare a statement, that is nothing but material issues, Nana. Valuation of material issues. Valuation of material issues by different methods. They give practical questions, Nana. Let us see that question. Prepare a statement. Okay, na? Prepare a statement showing the issue pricing of issues on the basis of simple average method and weighted average method from the information pertaining to the material D. They give the information related to the material D and they are asking us to calculate them. They are asking us to calculate the material issue price, Nana, by using which method, Nana? Simple average method, weighted average method. See, Nana, 1st March 2022 purchased how many units, Nana? 100 units. What is the price per unit, Nana? 10 rupees. So in the case of simple average method or weighted average method, Nana, we have to open 3 columns, Nana. How many ledger columns we have to open, Nana? 3 ledger columns. One is the receipt column, another will be the issue column, and the third will be the balance column, Nana. One is receipt column, one is issue column, another one is balance column, Nana. Again, each column has 3 subclassifications, Nana. Each column will be having how many subclassifications, Nana? 3 subclassifications. What are those, Nana? Quantity, rate, amount. Quantity, rate, amount. This will be the subclassification, Nana. Means totally 3 into 3, 9 plus 1, 10 columns will come, Nana. So while solving this question in the examination, don't do vertical, try to do horizontal, Nana. Why? Because 10 columns, it will become a little bit complicated when you are solving on vertical. So don't solve vertical, try to solve in the horizontal, Nana. Horizontal, though it will be enough space will be there so that you can do freely also. Okay, na? So in the stores ledger account, how many columns will be there, Nana? 3 columns. One is receipt column, another one is issue column, and the third one is which column, Nana? Balance column. First one, what is the first transaction, Nana? Purchase. Purchased how many units, Nana? 100 units. What is the price per unit, Nana? 10 rupees. See, purchase means receipt. Purchase means it will come inside the organization. So we have to write in the receipt column. Receipt column 100 units, 10 rupees, 100 into 10 amount 1000. And in the issue column it will be nil. In the issue column it will be nil. Again we have to write the same in the balance also, Nana. So what is the balance, Nana? 100 quantity 10 rupees. What is the amount, Nana? 1000 rupees. Next, Nana. Purchased 200 units at the rate 10.2 each on 2nd March. So date is 2nd March, Nana. 2nd March we purchased 200 units. 200 into 10.20, that is nothing but how much, Nana? 2040. Issue column again nil. We have to write in the balance column. See, in the balance column, Nana, already existing how much is there? 100 plus 200 here. So 100 plus 200, how much will become, Nana, total? 300. Next, what is the value? 1000 plus 1240. 1000 plus 2040. That is nothing but how much, Nana, total? 3040. Rate column not required, Nana, here. So this 3040 is how, Nana? 1000 plus already existing how much is there, Nana? 1000 plus 2040, Nana. So this is 3040. Okay, na? Understood, Nana? Next, issued 250 units to the job X wide material requisition. MRN means material requisition number 12. By using material requisition number, we issued how many units, Nana? 250 units. Okay, na? Now we have to write in the which column, Nana? Issue column we have to write. Receipt column nil. Issue column 250 we wrote. Now what is the issue price we have to take, Nana? What is the issue price we have to take? Simple. We have to take which price, Nana? Average price. See here. Calculation of simple average price issued on 5th March. So what is the average price, Nana? First price is 10 rupees. 2nd March 10.2 rupees. 10 plus 10.2 divided by number of prices is 2 divided by 2. So what is the average price, Nana? 10.1. So what is the average, what is the issue price we have to take, Nana? 10.1. 250 into 10.1, how much, Nana? 2525. So from 300 minus 250, balance how much is there with us on 2nd March? 300. 300 minus 250. 300 minus 250 is nothing but how much, Nana? 50. Next, 3040 minus 2525. So what will be the balance, Nana? 515. 3040 minus 2525. So what will be the balance, Nana? 515. That is the balance. How did they? That is how they got, Nana. Okay, na? 3040 minus 2525. Next, Nana. 7th March purchased 200 units at the rate 10.5. 200 units 10.5. That is nothing but how much, Nana? 2100. Here it is nil, Nana. Again balance. Previous balance how much is there? 50 plus purchased 207th. So total will become how much, Nana? 250. Next amount 515 plus 2100. That is nothing but how much, Nana? 2615. That is how we got the balance 2615. Next, Nana. 10th March. 10th March again purchased 300 units. What is the price, Nana? Did we purchased 10.8. 300 units 10.8. 300 into 10.8, Nana. That is nothing but how much, Nana? 3240. Again issue column nil. Balance column. Already 250 we are holding. 250 plus again we are adding how much in 10th? 300. 250 plus 300 550. Okay, na? Next here 2615 plus 3240. That is nothing but how much, Nana? 5. 2615 plus 3240. That is nothing but how much, Nana? 5855. That is the value, Nana. Next, 13th March issued 200 units, Nana. Issued how many units? 200 units to the job Y. Y the material requisition number is how much, Nana? 15. So material requisition number 15, we issued how many units, Nana? 200 units we issued, Nana. So 200 units we issued. Let us calculate the issue price, Nana, here. See here. Issue price on 13th March. Issue price on 13th March is equals to, okay, na? Before 13th March, what are the prices we are having, Nana? See here. Before 13th March, what are the prices we are having? One is 10.8, correct? One is, see here, 10.1 is 10.8, one is 10.5, another one is 10.2, another one is 10, correct? So here we issued how many units, Nana? 250 units we issued on 5th March. See here, listen carefully. 5th March we issued how many units, Nana? 250 units we issued, correct? Well, we issued 250 units, Nana. First we will issue how much units? 100 units. So 100 units we issued means 10 rupees is gone, na? We issued 100 units means 250 we issued. 250 means 250 minus 100 we will issue. 100 issued means gone, na? Again in the balance 200 is there. In this 200 how much will issue? Minus 150. So 50 will be the balance. How much will be the balance here in this? 50 will be the balance. That is the reason while calculating on 13th March. So we will take average of which prices? 10.8 plus 10.5 plus 10.2. You will get a doubt why we are not taking 10. 10 is already finished here. 10 is already finished here. That is the reason we are not taking. 10 is already finished on March 5th. That is the reason we are not taking. See, this is finished. That is the reason we are not taking. Then you are taking 10.2 no, sir. Yes, 50 balance is there, na? Purchased is 200, but issued is how much? 150 only. The balance 50 is there, na? That is the reason 10.2 I am considering. Okay, na? 10.8 plus 10.5 plus 10.2 divided by 3. Why? Because number of prices is 3. So what is the issue price, Nana? 10.5. 200 into 10.5. How much, Nana? 2100. 550 minus 200. Balance will be how much, Nana? 350. 5855 minus 2100. 5855 minus 2100. So the what will be the balancing figure, Nana? 3755. That will be the balancing figure, Nana. Next. Again 18th March issued how many units, Nana? 200 units they issued. In 18th March how many units they issued, Nana? 200 units they issued. Okay, now here you see now. March we are issuing how many units, Nana? 200 units we are issuing. Okay, now 200 units we are issuing means now this is also gone. This is also gone. Correct. While issuing this 200 units, this is also gone 50. Next, what is left? 10.5 and 10.8. Only this is left, Nana. So what will be the issue price? 10.5 plus 10.8 by 2. That is the issue price will be how much, Nana? 10.65. 10.65, 2130. 3755 minus 2130. That is nothing but 1625. 350 minus 200, 150, Nana. Again purchased how many units, Nana? 100 units, 11. Same 100 into 11, 1100. Add and write it, Nana. That's all. Next. Issued 150 units to job K. On 25th they issued how many units, Nana? 150 units to job K, Nana. So job K means here what is the price which is left over, Nana? See here. Now for this 200 units this price is also gone. For this 200 units this price is also gone. Only leftover price is what, Nana? 10.8 plus 11 divided by 2. That's all. 10.90. They wrote the balance, Nana. 2725 minus 1635. 2725 minus 1635. So that's all. They got the balance 1090. That's all. So this is how you have to calculate simple average price method. Simple average price method, issue price you have to calculate on the basis of averages, Nana. But doing average, while doing average, be careful, Nana. Be careful while doing average. That is most important thing here. Okay, na? Next method we have is which method, Nana? Weighted average price method. Weighted average is little bit easy only, Nana, comparing to simple average. Comparing to the simple average, weighted average is easy only, Nana. Why it is easy, sir? Because here in the case of weighted average, we will calculate weighted average price every time. That is the reason it is a bit easy. See, Nana. Next one is weighted average price method, Nana. In the weighted average price method, stores ledger account is also same, Nana. We will maintain the same receipt column, issue column, receipt column, issue column, balance column. Okay na? And each column again subclassifies into 3 columns na, quantity, rate, amount. Quantity, rate, amount na. Okay na? Let us see weighted average price method. First na, on 1st March to 2022 they purchased how many units na? They purchased on 1st March 2022 purchased how many units na? 100 units. What is the price per unit na? 10 rupees each. So 100 into 10, how much na? 10,000. Same thing we have to write in the balance column also. That's all. Okay na? Same thing we have to write in the balance column also. On 2nd March they purchased how many units na? 200 units. What is the price per unit they gave? 10.2. 200 into 10.2, that is nothing but how much na? 2040. 100 plus 200, how much na? 300. 1000 plus 2040, how much na? 3040. Here weighted average price is very simple na. 3040 divided by 3040 divided by 300. 3040 divided by 300, that is called weighted average price, 10.13. That is how he got 10.13 nana. Okay na? Next, on 5th March issued how many units nana? 250 units to job X. They issued how many units to job X nana? 250 units to job X nana. They issued 250 units to job X. Wide material requisition number how much nana? 12. So issued 250 units. See here. 5th March issued how many units nana? 250 units. Sir, what is the issue price we have to take? Weighted average price. Before transaction, whatever the weighted average price is that we have to take. Before transaction, what is the weighted average price? 10.13. So 10.13. 250 into 10.13 is nothing but 2533. So 300 minus 250 balance is 50 and the amount is how much? 507. Same 507 divided by 50. Same 10.14 it will come, but still he rounded off and he took it to 10.13 nana. Okay na? Next, 7th March. 7th March purchased how many units nana? 200 units. What is the price? 10.5 each. So just you need to take it and add here. 50 plus 200, how much nana it is becoming? 250. 2607 divided by 250. So that is nothing but how much now? 10.428. 10.428 means he has rounded off to 10.43 now. So here 2607 by 250 now. 2607 by 250. So this is how he got 10.43. Next nana. 10th March again he purchased 300 units. What is the price nana? 10.8. So he took it in 250 plus 300 550. 2607 plus 3240 5847. Same way 5847 by 550. So that is how he got 10.63 nana. Next, on 13th March issued how many units nana? 200 units. On 13th March issued how many units nana? 200 units. Same way he calculated, he deducted, and the price is 10.63. On 18th March he issued how many units nana? Again 200 units. 10.63 he calculated and the remaining value is same nana, 10.63. It is not changing. On 20th March he purchased 100 units. What is the price? 11 rupees per unit. And what is the amount nana? 1100. Take it and add it. 150 plus 100 250. 1595 plus 1100 2695. So 2695 divided by 250. That is how he got 10.78. He issued 150 units on 25th March. So remaining balance is how much nana? 150 units. So 10.78. The value is 1617. Okay na? Suppose in the examination nana. In the examination, what happened in 2021 examination, online examination, he asked, apart from this ledger account, okay, now, apart from this ledger account, he asked, what is the value of closing stock? What is the value of closing stock? He asked. When he is asking the value of closing stock, what you have to write? You know, you have to write this value. Closing stock value is how much nana? 1078. And another question also he asked in that examination. value of materials consumed, value of materials consumed he asked, value of value of material consumed means issue column is there na, in the issue column amount is there na, you sum of those total nana, 2533 plus 2126 plus 2126 plus 1617, how much nana, 8402. So you have to total these values nana. Which values? This column values. Okay, this column values you have to total up. Next, in the same way here also nana, in the same way previous question also, if he is asking you closing stock means you have to write this. Closing stock value 1090. If he is asking you value of materials consumed, if he is asking you 2525 plus 2100 plus 2130 6755. So this is the value of materials consumed now. Okay na? So this is how we should calculate now. Either it is a simple average method or weighted average method now. Next let us move on to the illustration number 6 now. Let us move on to the illustration number 6. Next now, let us move on to the illustration number 6. The stock of material held on 1st April 2022 was 400 units at the rate 50 per unit. So the stock of materials held on 1st April 2022, how much did they give nana? 400 units. What is the price per unit he gave nana? 50 per unit. The following receipts and issues were recorded. So receipts and issues also they have recorded nana. You are required to prepare stores ledger account showing how the value of issues would be calculated under base stock method. Under which method he is asking nana? He is asking under base stock method. Under base stock method, both through FIFO and LIFO. Base being base stock, how much he is asking us to maintain? 100 units. Means in the beginning itself only will maintain the base 100. That 100 units we will not touch. That 100 units we will not touch, will maintain like that only till the end. Till the end will maintain like that only. That is called as a which method nana? Base stock method. So first will let us prepare through FIFO method. First in, first out. Means the material which is received first, that will be issued first. FIFO method. Under FIFO method, the material which we are receiving first, that will be issued first. If you listen properly one transaction, remaining all the transactions you can solve on your own nana. Okay na? LIFO method means last in, first out. The material which is received last, that will be issued first. Okay na? Let us see the question nana. They give different dates, purchases as well as issues. Let us solve the question nana. Base stock method. Under base stock method we have to solve FIFO method and LIFO method. Base is being how many units nana? 100 units nana. Let us solve this. Same nana. Stock ledger account under basing stock through FIFO method nana. Stock ledger account under base stock through FIFO method. First in, first out. Same. 3 columns you have to open. One is a receipt column, one is issue column, another one is balance column. Again under each column there will be what? Sub columns also nana. Under each column there will be sub columns also. See in the given question now. First, On 1st April 2022, how much did they give, Nana? How many units did they give? 400 units they gave. And what is the price per unit he gave, Nana? 50 per unit. Okay, na? So he gave a opening balance, Nana. Opening balance we should not write in the receipt column. Only purchases we should write in the receipt column, Nana. Only purchases we will write in the receipt column. Opening balances we have to write directly in the balance column. Opening balances directly we have to write in the balance column. Sir, in the previous question you wrote no, sir, in the receipt. Yes. Why? Because it is a purchase. Why? Because it is a purchase. That is the reason I wrote in receipt column first. If it is a opening balance, then I will not write in the receipt column. Directly will write where? In the balance column. Okay, na? So receipt column, it is nil. So issue column is also nil. So he asked us to maintain a base stock. How much, Nana? 100 units. 100 base stock. This is base stock 100 units. What is the rate, Nana? 50. So 100 into 50, 5000. And opening balance he gave 400. 400 minus 100 remaining is 300. 300 into 50, 15,000. So by this one is finished. 1st April is finished, Nana. Okay, na? Next, come to the 2nd April, Nana. In the 2nd April, what did he give, Nana? Purchased 100 units at the rate 55 per unit. He has purchased 100 units. What is the price per unit he gave, Nana? 55 rupees. So write in the receipt column. Receipt column 100. What is the rate, Nana? 55. What is the amount, Nana? 100 into 55? 5500. Issue column is nil. Issue column is nil. Next, come to the balance column. Come to the balance column. Here, each and every method is different. Simple average is different. Weighted average is different. FIFO is different. LIFO is different. Stock price is standard price is different. Replacement price is different. Simple moving average is different. Weighted moving average is different. Each method is different. Nana. Okay, na? So you should not compare this method with that method. You have to follow the rules of each and every method. Each and every method, its own rules you have to follow. Simple average means we will take average price. Weighted average means we will take weighted average price. And in the case of FIFO means we will take first in, first out will issue. Just as it is we will write. Right? See, balance column. First we are writing balance 100, 50, 5000. Next 300, 50, 15,000. We should not merge. Next we purchased what? 100 na? Then it will come in the down after below that. 100, 55, 5500. By this date number, 2nd April is also finished. Next, 6th April issued 400 units. 6th April issued how many units, Nana? 400 units. So in the receipt column, nil. See here, we should not touch the base stock. We should not touch the base stock. This is which method? FIFO method. First in, first out means the material which is received first, that should be issued first. So we shouldn't, this is being base stock, we should not touch base stock 100. After 100, what is there? 300. So first we have to write 300, 50, 15,000 we have to issue. Still more, how much we required? 100 we required. Next 100, 55, 55,500. So the total is how much here? 300 plus 100. This total is how much? 400. Next, Nana, see here. So FIFO method, first in, first out. So first in, first out is nothing but first we have to, whatever the item which is received first is issued first. So base stock we should not touch here. So next what is there? 300. That is the reason I issued first 300. Next we require totally issued is how much on 6th April? 400. Na? That is the reason another one more 100 we required. 100 we issued that. So balance will be how much? 100, 50, 5000. That base stock will continue like that till the end. We should not touch. Next, Nana, 10th April. 10th April purchased how many units, Nana? 600 units. What is the price per unit? 55 per unit. So what is the price per unit, Nana? 55 per unit. So 600, 55, 33,000. Balance. First balance will be base stock like that only. 600 we purchased, na? 55, 33,000. Okay, na? Next, Nana. On 13th April issued 400 units. 13th April issued how many units, Nana? 400 units we issued. So receipt column nil. Issue column you see. Here base stock we cannot touch. Leave base stock. Remaining how much is there? 600. Out of 600 we have to issue 400. So balance will be how much, Nana? 200. Next, Nana. On 20th April 2022 purchased how many units, Nana? 500 units they purchased at the rate how much, Nana? 65 per unit. So 500, 65, 32,500 nana. Okay na? See in the balance column. First 100, next 200 which is their previous, next after that 500 we should write. So we should write in the same order. First balance whatever it is there, we have to write that balance. Next whatever we purchase we should write. Next nana. 25th April issued, again how many units? 25th April issued 600 units nana. 600 units means, see here. So 600 means we cannot, first we have to issue first 200. Next remaining balance 400 we have to issue out of 500. 500 minus 400, remaining balance will be how much nana? 100 into 65. Next nana. 10th May 2022 purchased how many units nana? 800 units at the rate 70 per unit. 800 units at the rate 70 per unit. So balance is how much? Same balance, previous balance we have to write. 100, 100 is there. 100, 100. Whatever we purchased 800, that we have to write in the last. That's all. Next. 12th May 2022 issued 500 units. 12th May 2022 issued how many units nana? 500 units. First you see, first whatever the balance 100 is there, we have to issue that 100 nana. After that out of 800 we have to issue how much? 400. 800 minus 400, balance will be how much? 800 minus 400, balance will be how much? 400. That is what he wrote, balance 400 nana. Okay na? Next. On 13th May again he issued 200 units. Out of this 400, out of this 400 again he issued 200. Balance will be how much nana? 200 units. Okay na? Next nana. 15th May purchased how many units nana? 500 units they purchased. 575. Okay na? Again 100, 200, after that 500. Okay na? Next nana. 12th June issued how many units nana? 12th June issued 400 units they issued nana. Means first we have to issue first 200, next out of 500 we have to issue 200. Balance will be how much? 500 minus 200, 300 will be the balance nana. Okay na? Next. 15th June purchased how many units nana? 300 units they purchased. So first 100, after 300, after that remaining 300 we purchased. Okay na? So this is the closing balance. If they are asking in the exam what is the closing stock value, this is the value you have to write nana. Closing stock quantity means how much? 300 plus 300, 600 plus 100, 700. This is the closing stock quantity nana. Okay na? Next, in the exam if they are asking you value of material consumed, then you have to add all these figures nana. 15,000 plus 5,500 plus 22,000 plus 11,000 plus 26,000 plus 6,500 plus 28,000 plus 14,000 plus 14,000 plus 15,000. So that is nothing but how much nana? Total 1,57,000. Value of material consumed is how much nana? 1,57,000. That is the answer nana. Okay na? So this is how you should do in the case of FIFO basis. First in, first out means the material which is received first in the order, same order we have to issue the materials nana. This method will call it as a which method nana? This method will call it as a first in, first out method nana. Okay na? Next nana. Let us move on to the next method nana, last in first out method nana. Last in first out. Last in first out is also very easy method nana. Same procedure, but last one we will issue first. Last one we will issue first. That's all. That is the difference. See in the question nana. Same. This first transaction there is no difference nana. Same here and there. Okay na? First transaction is same, there is no difference. Second transaction also no difference nana. Purchased 155, this is also same we will write. There is no difference. Next, 6th April nana. 6th April issued how many units nana? 6th April issued 400 units we issued. So last in, first out. Last in first out means what, Nana? Whatever the thing we purchased in the last, that we have to issue first. So last we purchased what, Nana? On 2nd April we purchased 100 units, na? So that we have to issue first 100. After this finished, out of 300 again how much we have to, out of 300 how much we have to issue? 300. Why? Because total 400, na? 100 plus 300. Balance will be how much, Nana? 150. That's all. So there is no difference, no sir, in the previous and this. Yeah, there is no difference, but presentation will be differing. Presentation will be differing. If it is a first in first out, you see, for what did we wrote? First we wrote 300, correct? But here you see, last in first out means first we are writing 100. Presentation matters. Okay, na? Next, when the number of transaction increases, values also will change. Next, Nana. 10th April, again purchased how many units, Nana? 600 units we purchased on 10th April. units we purchased, Nana. Again same thing we have to write 100 first previous figure, next 600. Okay, na? Next, Nana. On 13th April issued how many units, Nana? 400 units we issued. See, first we have to issue what, Nana? From 600 we have to issue 400. So balance will be how much, Nana? 200. So balance will be how much, Nana? 200 will be the balance, Nana. Next, Nana. 20th April purchased again how many units, Nana? 500 units they purchased. So first 100 while writing the balance 200. Next 500 we should write. Same. Next. 25th April issued how many units, Nana? 600 units. So issued 600 means first we have to issue last purchased one, latest we have to issue. So what is the latest purchase in, Nana? 500. So first we have to issue 500. Next, out of 200 we have to issue how much, Nana? 100. So balance will be 100, Nana. Next, on 10th May purchased how many units, Nana? 800 units. So while writing the balance 100 after that purchased one we should write. 12th May issued how many units, Nana? 500 units. 500 units means out of 800 we have to write 500 first, Nana. So balance will be how much? 300. Same thing we should continue. 800 minus 500, the balance will be 300. Last in first out, the latest one, last one we have to issue first. Next, 13th May again he issued how many units? 200 units. Out of 300 last we have to issue 200. The balance will be 100. Next, Nana. 15th May purchased how many units, Nana? 100 units they purchased. So first we should write our balances, then next we have to write purchased one. 100 after that 500. Next, 12th June issued how many units, Nana? 400 units. 400 means out of 500 we have to issue 400, Nana. So balance will be how much, Nana? 100. Okay, na? Next, Nana. Last transaction. 15th June purchased how many units, Nana? 300. So we have to write 300 in the last. Next, if someone is asking you value of closing stock is how much, so this is the value of closing stock. Okay, na? If someone is asking you what is the value of materials consumed, completely we should add this. Value of materials consumed means we have to take issues. Now what we have to take? Value of material consumed is equals to all the issues we have to add. Issues is nothing but consumption. 5,500 plus 15,000 plus 22,000 plus 32,500 plus 5,500 plus 35,000 plus 14,000 plus 30,000 plus, that's all. So how much, Nana? 1,59,000 500. This is value of materials consumed, Nana. So value of material consumed is equals to how much, Nana? 1,59,500. So by this, FIFO is finished, LIFO is also finished, Nana. Okay, na? Next, let us move on to the illustration number 7, Nana. Okay, na? See the illustration number 7. Prepare a stores ledger account from the following information adopting FIFO method of pricing issues of material. They are asking us to prepare on which method, Nana? FIFO, first in, first out. So what is the difference between previous question and this question? In the previous question, base stock is there. If you observe, we are not touching the base stock. We are not touching the base stock when base stock is there. When base stock is not there, as usual, we can touch anything. Just we can issue first in, first out. That's all. Everything we can issue. Okay, na? See, Nana. They gave the receipts, they gave the issues also. They gave the receipts and they gave the issues also, Nana. Okay, na? Let us see the question, Nana. Stores ledger account, Nana. First in, first out method. Okay, na? There is a receipt column, there is the issue column, there is a balance column, which you know as usual. Okay, na? So in this question, what we are going to learn, sir? Yes, there is some adjustments which you are going to learn newly. See here, it's not same. Opening balance, they gave 500 tons at the rate 200. Opening balance means directly we can write in the balance column, Nana. 500 tons. Directly we can write in the balance column 500, 200, 500 into 200, 1 lakh. 3rd March issued, how many tons, Nana? 3rd March issued 70 tons. 3rd March they issued how many tons, Nana? 70 tons they issued, Nana. So 3rd March 70 tons. 500 minus 70, 430. Same, the balance will be there. We have to write the balance beta. Okay, na? Next beta. 4th March issued how many tons, Nana? 100 tons. 4th March. We are having balance how much? 430. 430 minus 100. 330 is the balance. Okay, na? Next, Nana. 5th March issued 80 tons to department A. That is missing, Nana. You can write in the given question. Issued 80 tons to department A. That is missing in the question. You can write, Nana. Issued 80 tons to department A, Nana. See the 5th March, Nana. 5th March. How many tons we issued, Nana? 80 tons. 330 minus 80. What is the balance, Nana? 250. What is the balance, Nana? 250. Next, Nana. 13th March received from suppliers 200 tons at the rate 190. So on 13th March they received from suppliers, Nana. Purchase in the receipt column, and we can write in the balance column. Already existing 250 balance is there, that we should write first. 200, next, finish. Next, 14th March, this is the new transaction which you are going to learn, Nana. In this question, returned from department A 15 tons. On the 5th March we issued 80 tons to department A, na? So on the 5th March we issued 80 tons to department A. Unfortunately, the goods are not up to the mark. There is a damage in the goods. So they returned department A. How many tons, Nana? 15 tons. Means it has come back to us only. Okay, na? So it's like where we have to write, sir, return means it is coming back to us. We have to write in the receipt column. How many tons, Nana? 15 tons. You can see here. Then what is the price we have to take, sir? While writing, what is the issue price on 5th March? Same price we should take. See on the 5th March, what is the issue price? 200, na? Same price we should take. On the 5th March, whatever the price which is there, the same price we should take here, Nana. 5th March. On the 5th March, whatever the price which is existed, the same price we have to take here, Nana. That's all. Okay, na? Next, Nana. Sixteenth March issued how many tons, Nana? 180 tons they issued. How many tons they issued, Nana? 180 tons they issued. 180 tons they issued means, see here, this is FIFO method, na? First in, first out. Means we have to issue from where? First 250. Out of 250 we have to issue 180 tons, Nana. So issued 180 tons, 250 minus 180, the balance is how much, Nana? 70. So this is not base stock method. Now, if it's a base stock, we will not touch that stock. This is not a base stock method, so that we can write. Remaining balances continuously we can write. Okay. Next, Nana. 20th March, received from supplier 240 tons at the rate 195, Nana. So 20th March, they received from supplier, Nana. On 20th March, they received from supplier how much, Nana? 240 tons they received. How many tons they received? 240 tons. As usual, we can write. And in the balance column, we have to write in the last. Okay. Na? Next, on 24th March, issued how many tons, Nana? 300 tons. How many tons, Nana? 300 tons. 300 tons means first we have to issue 70. 70 plus. Next, what do we have? 200. Still, it is not enough. We require how much? 30. 30 means again how much is there? 15 plus. Again we require 15. That 15 we have to take from this 240. That 15 we have to take from this 240 now. So this is how we have to issue. So 70, next 200, next 15, next out of that 15. So what will be the balance on 240 minus 15? 225. Okay na? Here you may get a doubt. While we are receiving back, no sir, we cannot add it to the 5th March one, sir. We cannot add, Nana. While we are receiving, we have to treat it like a latest only again. Okay na? Next, 25th March, received from supplier 320 tons at the rate 200. 320 tons we received. In the issue column it's nil. Just we have to write in the balance column. That's all. We have to write in the balance column. Next, Nana. On 26th March, issued 115 tons to department B. So out of 225, we have to issue 150 tons. 115 tons we have to issue. And the balance we have to write, Nana. Okay. Next, on 27th March, what happened, Nana? Returned from department B. So whatever we issued, it has come back. So whatever the issue price is there here, same price we have to take here also. Same price we have to take here also, Nana. Next, on 28th March, received from supplier 100 tons. 100 tons it is received. We have to write in the last, Nana. So if someone is asking you value of closing stock, will be this. Value of material consumed. Just you need to add, Nana, all these things. Issues you need to add. Issues how much is there, Nana? Let us add all those things. First is 14,000 plus 20,000 plus 16,000 plus 36,000 plus 14,000 plus 38,000 plus 3,000 plus 2925 plus 22425 1,66,350. So this is the value of materials consumed, Nana. Okay na? Next, Nana. Illustration number 8, Nana. From the following information provided as under, you are required to prepare a statement showing how the issues would be priced if a LIFO method is followed. So they are asking us to prepare on which method, Nana? LIFO method. Last in, first out. So this is also very simple question only. Let's do it. Okay na? They give opening balance, same like as it is receipts, issue, balance. Here in the case of LIFO method also we need not to maintain which stock, Nana? Base stock, where it is not required. We need not to maintain base stock. On 1st February 2022, how many units he gave, Nana? Opening balance 100 units. What is the price per unit he gave, Nana? 10 rupees. So directly we can write in the balance column. 100 units, 10. Okay na? Next, 2nd February, received how many units, Nana? 200 units. What is the price, Nana? 10.5. Write in the receipt column, issue column is nil. Then we have to write in the balance column. then we have to write in the which column, nana? Then we have to write in the balance column, nana. Next, 3rd February, nana. 3rd February received, how many units, nana? 3rd February received 300 units at the rate 10.6 per unit. We have received how many units, nana? 300 units. So what is the rate, nana? 10.6 per unit. Same thing we have to write, 300, 10.6. Next we have to write as usual, nana, balances. 100, 200, 300, nana. Okay, got it? Next, nana. On 4th February 2022, on 4th February 2022 issued how many units, nana? 400 units they issued to a job A. Wide material requisition, MR number is material requisition number 1015, nana. How many units they issued, nana? 400 units. So this is which method, nana? LIFO method, means last in first out. The material which is received in the last, that should be issued first. So which is received in the last, nana? 300. So we should 300 first. The next out of 200 we should issue 100. So balance will be how much, nana? 100. Okay, nana, got it? Next, nana. 6th February 2022. 6th February 2022 issued how many units, nana? Issued 120 units to the job B. Wide material requisition number 020. Next, nana. On 6th February 2022 issued how many units, nana? 120 units. Now this is a which method, nana? Last in first out. So first we have to issue 100 units at the rate 10.5 first. Then next remaining 100, from that 100 we have to take 20, nana. So balance will be how much, nana? 80. Balance will be how much, nana? 80. Next, nana. 7th February 2022 received how many units, nana? Received 400 units. What is the price per unit, nana? 11. So same we can continue. Just we have to write issue column is nil. Okay, na? Same thing we can continue. Next, nana. 8th February 2022 issued how many units, nana? 200 units to the job B. We are issuing 200 units, means first from latest, what is the latest one? 400. Now from 400 we have to issue 200. So the balance will be how much, nana? 200. The balance will be how much, nana? 200 units will be there. Next, nana. 12th February 2022, nana. 12th February 2022 received how many units, nana? 300 units we received. So what is the price per unit, nana? 11.4. Okay, na? Same thing just we can write, and we can write in the balance column, nana. Just we can write in the balance column. Next, 13th February received 200 units, na? Same, just we have to continue. Balance column. Issue column will be what, nana? Nil. Issue column will be what, nana? Nil. Next, nana. 17th February issued how many units, nana? 400 units. 400 units means first we have to take the latest one. What is the latest one? 200 is the latest. First we have to issue that. Out of the 300 again we have to issue 200, nana. So balance will be how much? 100. That's all. If someone is asking you value of closing stock, this will be the value of closing stock value. Value of material consumed. So that is nothing but just we need to sum up all these things, nana. Okay, na? 3180 plus 1050 plus 1050 plus 200 plus 2200 plus 2300 plus 2280. That is nothing but how much, nana? Value of material consumed 12,260. This will be the value of materials consumed, nana. Okay, na? So this is how we should do the LIFO method, last in first out. So by this question number 8 is also finished, nana. Okay, na? Next we can move on to the question number 9. Let us move on to the question number 9, nana. Next, let us move on to the illustration number 9, nana. Okay, na? So before moving on to the illustration 9, Nana, just I will give you a brief differences between base stock method, FIFO, LIFO method, Nana. Under the base stock method, under the base stock, either it's a FIFO method or LIFO method, Nana. Don't get confused. Under the base stock method, compulsory we have to maintain base stock. Under the base stock method, compulsory we should maintain what, Nana? Base stock compulsory should be maintained. Base stock compulsory should be maintained. We should not touch, while we are issuing either it's a FIFO method or LIFO method, we should not touch the base stock. Without touching the base stock, we have to issue the remaining stock. Next, Nana, FIFO method, first in, first out. So what do you mean by this first in, first out method, Nana? First in, first out is nothing but whatever the raw materials which we are receiving first, that should be issued first, Nana. That should be issued first. What do you mean by LIFO method? Last in, first out. The materials which we are receiving in the last, we should issue first. The raw materials which we are receiving in the last, that we should issue first. That will call it as a which method, Nana? Last in, first out method. Okay, na? Next, let us move on to the next questions, Nana. Prepare a stores ledger account showing pricing of material issues on replacement price basis method, Nana. On which method, Nana? Replacement price. So replacement price we need not to calculate, that will be already given in the question. At the time of issue, this is a very easiest method comparing to FIFO, LIFO, this will be easiest still. At the time of issue price, we have to take replacement price. Issue price is replaced by replacement price, that's all, nothing else. See, they give opening stock also, received issues on different dates. Let us do. See here. They give replacement price on different dates. Whenever the issue will be there, instead of LIFO price or FIFO price, what we should take here, we have to take a replacement price, that's all. Here also we will open, how many columns, Nana? 3 columns will open, Nana, generally. Receipt column, issue column, balance column. Again, each column consists of 3 sub columns. Okay, na? Next, see the question, Nana. Opening balance. What is the opening balance they given in the given question? 400 units at the rate 4 rupees per unit, Nana. So directly we can write in the balance column 400 into 4. That is nothing but how much, Nana? 1600. 400 into 4. That is nothing but how much, Nana? 1600. Next, 15th March 2022. 15th March 2022, sorry, 10th. Next is 10th March. 10th March 2022 received how many units, Nana? 100 units. At the rate how much, Nana? 4.1. So 100 units, 4.1, 410. Directly we have to write issue price, issue column is nil, Nana. 400 plus 100. Total is how much, Nana? 500. We need not to maintain price column here because we are taking replacement price anyway for issue. So that is the reason we need not to maintain. Directly we can sum up and we can write 1600 plus 410. So that is nothing but how much, Nana? 2010 rupees. Next, Nana. On 15th March issued 300 units to job XY, wide material requisition number 14. They had issued how many units, Nana? They had issued 300 units. So to the job XY, Nana, what wide material requisition number is how much, Nana? 14. So issue price, see the 15th March 2022. What is the replacement price that is already given in the question, Nana? Replacement price given in the question is how much, beta? 4.2. So that price we have to take for that 300 units. 300 units, 4.2. That is the replacement we have to take. 500 minus 300. How much is the balance, Nana? 200. 2010. 2010 minus 1260. That is nothing but how much is the balance, Nana? 750. Next, Nana. 17th March. On 17th March received, how many units, Nana? Received 200 units at the rate, how much, Nana? 4.3. In the receipt column we can write issue column is nil. Next, 750 plus 860. So 200 plus 200, the balance is 400. Next, Nana. 20th March issued how many units, Nana? 250 units. So what is the replacement by price they gave for 20th March, Nana? 4.4. So that is the price we have to take. Receipt column nil. Replacement 250. 250 units. What is the replacement price? 4.4. 400 minus 250, 150, Nana. So 1610 minus 1100, Nana. minus 1100. So the balance will be how much, Nana? 510 rupees, Nana. Next, on 25th March received how many units, Nana? 400 units at the rate 4.5 per unit, Nana. 4.5 per unit. This we can write 510 plus 1800. Okay, that is nothing but 2310. Next, 26th March issued how many units, Nana? 200 units they have issued. How many units they issued, Nana? 200 units. What is the replacement price? 26th March they gave 4.6. 200 into 4.6 is 920. 2310 minus 920. Okay, na? So that is nothing but how much is the balance, Nana? 1390. 550 minus 200, the balance will be how much, Nana? The balance will be 350. Next, 27th March received 100 units at the rate 4.6. That is nothing but 1390 plus 460. That is nothing but how much, Nana? 1850. Next, 30th March issued how many units, Nana? 30th March issued. 30th March we have issued 300 units. On 30th March we have issued how many units, Nana? 300 units. So what is the price, Nana? Issue price, replacement price 4.8. That is nothing but 1440. That is nothing but 1850 minus 1440. So what will be the balance, Nana? 410. If someone is asking you closing stock value, this is closing stock value. Okay, na? Value of material consumed is nothing but issues, just whatever the amount issues is there, that we have to add, Nana. 1260 plus 1100 plus 920 plus 1440. That is nothing but how much, Nana? 4720. That is the amount, Nana. How much is the amount, Nana? 4720. That is the amount, Nana. Go through once. If there is any doubts, let me know. Next, Nana, let us move on to the illustration number 10, Nana. Okay, na? Let us move on to the illustration number 10. Stocks are issued at a standard price and the following transactions are occurred for a specific material. So that is nothing but this is which method, Nana? Standard price method. Okay, na? Let us discuss the standard price method from the next session onwards, Nana.